The whole banking system is completely insolvent. And the Fed hasn't even raised rates anywhere near high enough to get rid of inflation. We actually need much higher rates than where the Fed stopped. The media keeps saying there's a disconnect between the voters and the economy. No, the disconnect is between the data and the economy. See, people think governments give them things. Government doesn't have anything. It has to take it first. It has to take it from somebody who produced it to give it to somebody who didn't. But in the world of all-powerful AI, everybody can have everything.
Then you just put your goggles on and get your stimulus check. And
you don't need a stimulus check. Your goggles give you whatever you want, right? The AI is so super intelligent that it's almost like a god. Because of FINRA, the little guy can't even get professional help. They end up having to do it themselves, and they're more likely to get scammed. I mean, I wish we had no FINRA, wish we had no SEC. Eventually, there's a collapse. Eventually, inflation runs out of control. I've been trying to help people protect themselves from this crisis for a long time. I'm investing to win the game. I don't have to get out of my stocks. I own the right stocks. I have the winning hand.
Welcome back to another episode of the Meet Kevin Show. Today, we have the honor and privilege to once again be at Peter Schiff's home. Peter, the last time we were here was about 10 months ago. Bitcoin has since doubled, and we had a big debate with your son about Bitcoin. What's going on?
Well, I guess I should have bought some, huh?
What's the future? I mean, ETFs now?
My son was trying to get me to invest in AI stocks back then. I didn't even know what they were. He should have told me NVIDIA. Now he's been pushing me to NVIDIA for some time because he's really into AI now, not so much crypto anymore. He doesn't really talk about that.
Oh, really? What happened?
Well, AI, he's just, that's his new thing. So.
Wow. And so what do you think? What's your position been? I mean, the ETFs, are these the next big thing for Bitcoin, much like when gold had its ETF back in the early 2000s?
Yeah, that's what the Bitcoin community is hoping for, or is, that's the story they're telling. But I don't think that's going to happen. I don't think there's this huge pent-up demand for Bitcoin. Bitcoin's been around for a while now, and it's certainly been in the spotlight since 2017 when it had the initial big run. But then really 2020, 2021, with all the Super Bowl commercials and, just all the hype. And, they had the futures ETFs that came out a couple of years ago. And a lot of stocks, like MicroStrategy came out, Coinbase, you had, El Salvador, lots of stuff in the news about crypto, all the celebrities and influencers that jumped on the bandwagon. So I think that most of the people that wanted to buy bought. I don't think they were just, I can't buy. We don't have a spot Bitcoin ETF. Like, I'm just waiting for that. I don't think there's all this demand. I mean, they think it's kind of like the field of dreams. Well, if we build an ETF, then all these investors are going to come and they're going to buy it. And I think the buying already happened. I think it was, buy the rumor, sell the fact. For years, the rumor of these ETFs was a major catalyst to get people to buy because they wanted to buy before the ETFs so that they would already own it. And then when everybody else came to the party and bought the ETFs, you would make a lot of money if you front ran it. Well, I think that trade was already done. The gold ETFs, the value there was a lot of people didn't want to buy the physical gold, didn't want to store it. They were worried about losing it. And when you buy gold, you can't really buy it at the spot price. You have to buy it in some form. You got to buy a coin, you got to buy a bar. So that adds to the cost. And so the ETFs took away some of that cost because now you're buying into 100-ounce bars, which is a lot cheaper than, coins. But, you didn't have to worry about storing it. You can buy it very simply in your brokerage account. So it did make it easier for a certain segment of the market to buy gold. But with Bitcoin, anybody who wants Bitcoin can just go buy it, just set up a wallet. I mean, that's what everybody has done. In fact, the whole point of Bitcoin is not to have a third party. It's your own keys. You don't have to trust somebody else. You don't have to pay storage fees. The only, I think, reason it might make sense for somebody to do an ETF is if it's in an IRA. And of course, they have Bitcoin IRAs already, but it is easier to buy the ETF than to set up one of these IRAs. But how much IRA money is really, wanting to go into Bitcoin that's not already there? I think people already bought Bitcoin in their taxable accounts. It's completely inappropriate for an IRA. I mean, most of the big firms probably won't allow it. Certainly, they wouldn't allow it to be solicited in an IRA because the broker could get sued for putting something very speculative like that.
Oh, if they're making the allocation decision, so to
or
speak,
even if they made a recommendation, because an IRA, I mean, it's supposed to be your retirement money. It's supposed to be more conservative. I mean, not gambling with it. So I don't think there's a big case to be made for the ETF. It was part of the hype. And as you can see, the day the ETF started, Bitcoin almost hit 50,000, and it just got below 40,000 briefly a couple days ago. So it sold off, and almost all the ETFs, in fact, all the ETFs dropped 20% or more from their peak price on the day they started trading, which technically fits the Wall Street definition of bear market. So we already got kind of an immediate sell the news. But I think there's a lot more selling to come.
Even more. So you don't think that, I mean, the idea is this institutional allocation might leave Bitcoin becoming this next $10 trillion gold-like asset. So in other words, there should be at least a 10 plus X in it. And with the finite supply, Kathy Wood says, we're going to 500,000 in her bear case scenario. What's your bear case scenario?
Well, I mean, first of all, the idea that the institutions are going to come and be the bag holders here. Like the little guy got in years ago, and now that we built this ETF, you're going to see pension funds and endowments and all the big sophisticated money is now going to buy in to this mania, right? Late in the game. I don't see that happening. Could there be some money dumb enough to bite at it, like, oh, I'm going to just buy this because it's going up, right? The FOMO. It's possible, and I'm sure some money has flowed in. But remember, there's a lot of money coming out, especially Grayscale. I mean, people were buying Grayscale when it was at a 40, 50% discount to NAV to play the eventual move to ETF, which has now happened. So, and a lot of money is already coming out of Grayscale. And a lot more money is going to come out of Grayscale. I mean, even if you want to stay in an ETF, why would you stay in Grayscale at 150 basis points when other people are, a fraction of that? But Grayscale used to be a big buyer of Bitcoin, and now they're a seller. And it was a one-way street, right? Bitcoin checked in, but they never checked out because it was a closed-end fund. That's why it was trading at a discount. Well, it's not going to trade at a discount anymore because when people sell, they got to sell Bitcoin into the market. So I think the dynamics have flipped. I think you're going to have a lot more sellers. And then eventually, I think the money that went into these ETFs, I don't believe these are the die hard hodlers, even though one of them has the symbol hodl, right? But I think this is more trading money. I think to the extent that people are going to be in the ETFs, it may be people who were trading on Coinbase, which is why I've been saying it's negative for Coinbase, because I think some of the day trading is going to happen now in the ETFs versus directly in crypto exchanges. But I think a lot of the people that are buying now are buying as a trade, buying to make money. And if we start to break down, Bitcoin, maybe cracks 30,000 or whatever the key is going to be, 20,000. I think you could see a lot of people just getting out. In fact, people could put stops in on these ETFs, just market orders. Like if it dumps, get me out at the market. I don't know how Bitcoin is going to handle that. I don't know what's going to happen when you get a bunch of sell orders that hit the market. And one of the things that's happened in the past when you had a lot of sell orders with Bitcoin is all of a sudden there'd be more tether. Tether would just come out of thin air and buy up all that Bitcoin, right? Well, if they're just counterfeiting tethers and they can expand a supply of tethers and kind of use it as a plunge protection and buy Bitcoin. But if people start dumping the ETFs, you can't, there's no tether. The ETFs need dollars. When people redeem, the sellers need to get dollars. They can't take tether. So all of a sudden you could have a lot of Bitcoin dumping on the market and only actual dollars would be able to buy.
So you think the ETF is a net negative for Bitcoin?
I think it's going to be. I think the potential of the ETFs was the positive. That was the catalyst. Hey, you got to buy it because the ETFs are coming. You got to get in before the ETFs, because once the ETFs are here, you're going to have all this new buying that's just like been sitting on the sidelines for years. And it never made sense to me because, first of all, there were futures ETFs, which pretty much the same thing. I mean, same exposure. There were lots of stocks that were Bitcoin proxies, like MicroStrategy, like Coinbase, like some of these other
Michael
stocks.
Saylor's company, right? I mean, it was essentially, at one point, I think he even called his company an ETF. I mean, obviously it's not.
No one even knows what software they do. I mean, who cares? You're not buying MicroStrategy because you like their software business, right? All those guys have sold it. Anybody who is in MicroStrategy because they like the company, they're gone. It's all, crypto people that are in it now, right? Plus, there are and have been spot Bitcoin ETFs in Europe, in Canada. The institutions are not limited. If you're managing money for a big institution, there's nothing that stops you from trading in Europe. Nothing that stops you from trading in Canada. So if you wanted to buy a Bitcoin spot ETF, they were there. It's not like, so I think that now that you've got these there and there's 11, 12 of them, whatever. All right, that's it. So now what? Now what are you going to do? What's the next big thing that is going to happen that's going to sucker in more buyers to keep the Ponzi going? That's it. I think this is the end of it. There's nothing left up your sleeve in crypto now that you've got the ETFs. And what I do think is going to happen, and people are missing the point, Gary Gensler did not want these ETFs, but he kind of got backed into a legal corner. But, before they came out, he was warning, hey, this is risky, don't buy. I think they're getting ready to come out with some more regulation on crypto and Bitcoin, not just from the SEC, but the Biden administration. AML, KYC kind of stuff that's going to significantly increase the cost of trading in crypto. But I also think they're going to issue some warnings to the broker-dealer community, the investment advisor community, like, hey, we don't want you recommending this stuff. And if you do recommend it and your customer loses and they take you to arbitration, you are going to lose.
Wow.
So it's going to be like, and I know how the arbitration, and I got out of FINRA. I've never liked this about this heads I win, tails you lose mentality, but it encourages customers to gamble knowing that they can get their money back if they lose. And in fact, one of the reasons that Wall Street, a lot of the big firms won't take small investors, right? You try to open up an account for $10,000, $25,000 at Merrill Lynch, right? Morgan Stanley, they won't let you open the account. They won't take you. And the reason is they say those small accounts come with a free put. And what that means is if the investor loses money, you have to give it back. Because they'll file an arbitration. There's all these lawyers that'll take it on contingency. And it costs you 50, 100 grand every time someone sues you, even if you win. So if a guy opens up a $10,000 account and loses it and sues you for the 10 grand, what are you going to do? Fight him? No, you write him a check. So they won't take the accounts because they know it's like a casino where you're betting with the house's money. But that, one of my big criticisms of FINRA, because the whole idea of FINRA is like, oh, we want to help the little guy who's not sophisticated. He's going to get ripped off by these, brokerage firms. Well, FINRA has made it so expensive to be a broker-dealer and to service the small customer that nobody will even work with them. So because of FINRA, the little guy can't even get professional help. They end up having to do it themselves, self-directed, and they're more likely to get scammed. They're more likely to fall victim to fraudsters because the legitimate firms refuse to work with them. So because of the government, more people get ripped off. I mean, I wish we had no FINRA, wish we had no SEC. The SEC and FINRA blessed Bernie Madoff. In fact, they said, hey, you can trust me. Look, the government says I'm okay. I got the government's good housekeeping seal of approval. I'd rather have the free market. If broker dealers want to join a club, if FINRA was voluntary, I would have been all in favor of it. But it was like, you want to be a stockbroker, you have to be a member.
So a lot of folks say that regulation would help be a catalyst towards Bitcoin and crypto. You actually think it's completely the opposite.
Yeah, and it's ironic to see the crypto community. We need more regulation. We want more government. No, the whole point of it was like, we don't want government. We want to get away from that.
But isn't that like an FTX where you have no supervision at all and then you get a collapse? Yeah,
well, look, again, FTX collapsed. The government didn't do that. The government didn't do anything about FTX until after it collapsed. Ponzi was the original creator of the Ponzi scheme, right? It wasn't called Ponzi scheme until after Ponzi pulled it off. But there was no SEC, there was no FINRA when Ponzi was around. His scheme collapsed in less than a year. The free market figured him out and collapsed it. Bernie Madoff pulled off his Ponzi scheme for a lot longer, right under the nose of the SEC and FINRA. So the free market does a much better job of ferreting out fraudsters than the government. The government actually comes in and then cozies up with the criminals, and ends up helping perpetuate their crimes because the industry captures the regulators and then ends up using the regulators to stifle competition, which is what happened. I mean, the reason I initially sold my broker-dealer that I started in the mid-90s was it was too expensive to continue it. I was spending millions and millions of dollars a year on compliance. And when I first started, compliance was a fraction of the cost. So I started my own broker-dealer. But could a young Peter Schiff start a broker-dealer today? No way. Impossible. So there are a lot fewer broker-dealers. They've gone out of business. They've merged because they can't handle the regulation. I mean, my bank, before the government, conspired with the media to shut it down, and ironically, the media falsely accused me of using my bank to help people launder money and evade taxes. I spent millions of dollars a year making sure that nobody used my bank. That was the biggest cost. I had 65 employees of my bank. 30 of them worked in compliance. 30. I had one person in marketing. One. So one person to get business, 30 people to shut it down, right? To prevent business from happening. We turned down like 75% of the account applications. And we screened them. Most people wouldn't even apply because we had such a rigorous process. We said, if you're doing this, don't even bother applying. So we screened out who could apply, and then we turned down 75%. I mean, what business wants to turn down 75% of its customers? It's like, but we did it. But yeah, so I don't even have that bank anymore. I sued the media in Australia for defamation and won. But it doesn't come close to recouping my losses. I'm filing more lawsuits over there. I didn't sue the New York Times, but the guy that wrote the article, I don't know if it was defamation, but he definitely lied. He misrepresented the facts in the article, and because the media wanted to create the false impression that my bank had lax customer vetting or compliance, when we actually had a stronger customer vetting than just about any bank. In fact, one of the guys at the only guy that the New York Times reporter, Matthew Goldstein, cited as evidence that my bank had lax compliance. I just dug up a YouTube video from 2018 where he's actually talking about the very account that he opened at my bank that he never used. He only put in 425 pounds and never even used the account. So it's not like, he has any experience really. But it took over 3 weeks to get his account open. But the guy was talking, and I tweeted this out, or not, I posted it on X. But he says, I opened up the account and my God, they asked me so many questions. I wasn't expecting it. It was very rigorous. They needed all this information. They needed all these forms. They asked so many questions about the account, about the company. He said it's a lot harder to open a bank account there than it was in the UK, where it takes one day and you just give them like 12 pounds. I mean, he even admitted, in fact, everybody that the reporters in Australia and New York interviewed about my bank, all the former customers, former employees, referral agents, everybody said, oh my God, their compliance was like over the top. I've never seen anything like it. I mean, the main reason we lost accounts was because they couldn't handle the compliance. Because every time you wanted to send money out, we put you through the ringer.
So as an entrepreneur, why go into banking in the first place?
Yeah.
Or broker-dealer?
You shouldn't. I learned that. I mean, I'll never do it again. But, I saw a niche that I wanted to fill. I mean, I was a 100% reserve bank, didn't make any loans. My bank was, no customers were at risk. All these banks now are insolvent in the US because they loaned out money for 30 years. They bought mortgages and government bonds. I didn't do any of that. I probably had the most solvent bank in the country. And of course, when they shut it down, the regulators claimed they were doing so because it was insolvent, even though I had no debt and millions more in cash than my deposits. And when the false allegations came out in the media, in the New York Times and in Australia, my bank at the time had about 270 million in deposits. By the time they shut it down in June of 2022, there was only about 70 million left. So 3/4 of my deposits got withdrawn because of all the problems that the media created. We sent them the money. What bank could handle a 75% run? Right.
Well, apparently none of them in March of 2023 when we had a banking crisis.
Well, none of them can handle it now. I mean, they only keep a couple of percent. It's fractional reserve. So I was able to send back all the money, but then the government took over the bank. They've been in control for 19 months. And since they took over, not a single dime has been returned.
And that's
to any
FDIC
customer.
receivership?
No, not FDIC. We didn't have any FDIC insurance. The local Puerto Rican government took it over.
Oh, wow.
But the IRS, I think, is the reason that they closed it. They came down here because they wanted to send a message to the world that Puerto Rico wasn't going to tolerate money laundering or tax evasion, because my bank got investigated by the U.S. government for 2 years. They took hundreds of thousands of documents for thousands of accounts, and they found nothing. Not only did they find that the bank did nothing wrong, they've investigated thousands of customers, and they haven't found a single customer that did anything wrong anywhere in the world. Yet my bank was the target of the largest money laundering, tax evasion investigation in the history of the world. 5 governments investigated my tiny little bank. They probably spent more money investigating my bank than anybody else. I mean, part of the irony of it is, we mentioned FTX. Sam Bankman-Fried was running his giant fraud out of the Bahamas. That's not too far from Puerto Rico, right? They didn't do anything to him. They were spending all their time investigating me.
Well, he was donating to everyone.
Yeah, well, he was. Yeah, I didn't give any money to any Democrats. And he was out there virtue signaling. He was talking about how he didn't want any money for himself. He was just like, I just have this one pair of tennis shoes and a t-shirt, and I live with 14 roommates, and here's my beat up old car, right? Like, meanwhile, behind the scenes is like lifestyles of the rich and famous, right? But, I'm honest about, what I'm doing.
So are we going to have another banking crisis? I mean, you've got a unique insight here. You were in banking, and I'm sure, the banking crisis happened within a month of the last time we were here. We had the Bank Term Funding Program that's coming to an end here on March 11th. So they say. Right.
We'll see.
I think that needs to be followed up by a rate cut right away to hopefully prop up some of those bonds again. Otherwise, we'll walk into another banking crisis.
It's not just a rate cut.
What do you think?
They're probably going to go back to QE.
You think so?
Look, in March of last year, we would have had a worse financial crisis than 2008 had the Fed not stepped up. Now, that doesn't mean they did the right thing. They did the wrong thing. They should have allowed the crisis, because a worse crisis is going to result from the delay and what they
another
did.
Worse crisis is ahead of us than 2008.
Yes, and worse than what March would have been last year had we had it in March of last year, right? They always kick the can down the road because they'd rather have a problem tomorrow, even if it's a bigger problem tomorrow, than a smaller problem today, because then it's somebody else's problem, right? But I think the banking system is completely insolvent in the United States. I think it is in much worse shape than it was in 2008 when it collapsed. And usually people will say, well, yeah, there's problems, but it's not like 2008. But they think it's not like 2008 because it's not as bad. It's actually not like 2008 because it's much worse. So there's two big real estate problems or problems the bank has. In 2008, the problem was mortgage loans that went into default. People stopped paying their mortgage. And the reason this was a problem for the banks is because when somebody doesn't pay their mortgage, well, you got to sell the house. That's the collateral for the loan. But if you remember back then, people were making zero down loans. And so they didn't have much. And real estate prices went down. So I loaned somebody $500,000 to buy a house. Now the house is worth $300,000. The fact that that's happened in and of itself is an incentive for the borrower not to pay.
Of course, walk away. Yeah.
And especially if they had a teaser rate on their mortgage. So their mortgage started out and the guy was paying maybe $2,000 a month, but now he's paying $3,000 a month, but he only makes, $2,000 a month, whatever. He was paying a lot of money for his mortgage because he thought he was going to get rich owning a house. When it turns out that he went broke, he's not going to make that payment. Why make payments when you're so underwater?
I mean, that sounds worse than it is today, where you've got people locked in at 2.5% mortgages, 30 years.
No, it's not worse. It's worse for the borrower. Although the borrower just walked away. If they put a down payment, they lost it.
In 2008, they just walked
away.
Okay.
But you could go and rent a place or do something else. So the problem was when the loan defaulted, the bank lost. And when I was critical of the adjustable rate mortgages and nothing down and things like that, I never criticized it from the point of the borrower. I always said the borrower was smart to put nothing down because then you got nothing to lose. I mean, if somebody is dumb enough to let you free roll, right? Putting a down payment was the mistake. The problem with a zero down or low down, no doc, ARMs was the lender. The lender was giving somebody, a free bet on real estate.
So
hey,
why
I'm going
not
to buy
take
this
it?
real estate. If heads I win, tails the bank loses. Well, it was tails. The banks lost. And so they lost money. And, a lot of banks should have failed. And unfortunately, they got bailed out by the government. But most mortgages did not default. It was still a small percentage, but that was enough to wipe out the bank capital because they didn't have a lot of capital. It was big pyramid. Well, today, it's the opposite problem. The problem isn't the mortgages that default. It's the ones that are current, that keep paying. Because this time, real estate prices haven't crashed. The mortgage prices have crashed. So
the bond market essentially has crashed.
So the homeowner doesn't own the mortgage. He owes the mortgage. He owns the asset. The bank owns the mortgage. The mortgage has crashed. So if I loan somebody $500,000 at 3% and they don't have to pay me back for 30 years, what's the present value of that mortgage? Oh, maybe, 30, 40%, half. Mm-hmm. So the banks are underwater, not on the real estate, but on the mortgages. Now, the borrowers, they're going to pay. They're not going to stop paying on these sweetheart deals. They got 3%, right? They're going to take that mortgage to the grave. Right? It's the only thing that's not going up, right? The price of everything is going up except your mortgage, right? So it's the mortgage is the homeowner's biggest asset. It's the bank's biggest liability. So the banks are losing money on every mortgage, and the homeowners aren't going anywhere. And they even if they wanted to, they can't sell because they can't buy anything else because they can't get that mortgage. The mortgage isn't portable. They can't take the mortgage from one house and move it to another house. And the buyer of their house can't even assume that mortgage. So they're stuck there, right? So the real estate market's not moving. Houses aren't for sale. So home prices are still high. No one could afford to buy because the price is structured for 3% mortgages and they're 7%. So the housing market is dead. But so the banks have lost a ton of money. But it's not just mortgages they bought. They bought treasuries and things like that. So they're way underwater. That's why the banks can't afford to pay interest. Go to your bank and say, hey, how much interest can I get? Well, I can't get anything. Oh, then I want my money. I'm taking my money out of your bank. I'm going to put it in a money market where I can get 5%. Right? That's the crowding out. Everybody's loaning money to the government. The banks don't have any money. That's why the banks had to go to the Fed. Why did the banks need money? Because the depositors wanted their money and the banks didn't have it. Well, they still don't have it because they gave it to the customers. How are they going to repay these loans in March? That's why I think they're going to extend this program.
So you think the only way essentially the Ponzi keeps going is if the Fed extends the bank term funding program, and if they don't, and they call these $160 billion of loans due, we'll have banking crisis 2.0. What does that do for the consumer?
Exactly, but also depositors. If the Fed doesn't extend this, that's going to create a bigger run on the banks, because you're going to have to take your money out of a bank if you're worried it's going to fail, because the FDIC only goes to what, 250,000 now. What is it? Yep. So if you've got a lot of money to bank, you're not going to leave it there. You're going to take it out and put it in one of the too big to fail banks. So any bank that's not too big to fail is going to fail. That's another example of where the government comes in and distorts the market because they give a comparative advantage to the bigger banks. But the other thing I wanted to point out about why the banks are insolvent, particularly a lot of the regional banks, it's not just a residential mortgage book, it's commercial. And commercial is a different problem. Commercial is more like 2008, where it's the default problem and the collapse of commercial real estate values. Because when people bought a lot of this commercial real estate, interest rates were at zero. And commercial real estate is like a bond. It trades at a cap rate, and the lower interest rates are, the more commercial real estate is worth. Because what investors just do is they look at the income, right? And they compare it, well, I can buy this piece of property and collect rent, or I can buy this bond and clip coupons. So it's the interest rate determines the value of the commercial real estate. So when interest rates were at zero, and you had rental streams from property, commercial property prices went way up. And that was also helpful because in 2008, when the banks were losing money on their residential loans, they weren't losing any money on their commercial loans because commercial real estate went up and everybody paid. But now what's happened? Well, you had COVID, and that started the work from home craze. So a lot of office space is empty. You also had the bankruptcy of what's that company?
Credit Suisse? The banks? Sorry.
No. The company that rented out all this office space.
Oh, WeWork again for the second time.
WeWork, yeah. Yeah. So now you have all this WeWork space, right? WeWork didn't. That was my joke always about it. But now you have all that space on the market, right? They were some of the biggest tenants in the major markets in the country. That space is up for sale. Interest rates have risen a lot, so that's also brought down real estate. But the rents have collapsed because the offices are vacant. Then you also have shopping centers, malls that are half empty. Why? Well, not only are people working from home, they're shopping from home. And they're shopping less because they're spending all their money on food, on rent, on utilities, on healthcare. They don't have as much money left over for things that restaurants or stores that they would just go and buy things that they don't really need, just stuff that they liked. So you have all these vacancies that have collapsed the income. So commercial real estate prices, you look at most markets, they're down 30%, 40%, 50%. And in some cities, where the crime has exploded ever since, we had the Black Lives Matter protest with Chauvin and George Floyd and all that stuff, when all the police just stopped enforcing the laws and they stopped locking up the shoplifters. Insurance rates have gone through the roof, losses due to theft. So stores are shutting down, and a lot of employers don't even want their workers coming to work. They're afraid.
So what do you think? How does this manifest?
Well, these are huge losses for the banks because the owners of this commercial real estate, when you borrowed, let's say you borrowed $200 million from a bank to buy a piece of property, and that property is now worth $100 million, and your loan was 7 years, and now it comes due. And when you borrowed the money, you were paying 4%, and now they want 10. I mean, what's the odds that you're going to, even want to stay in? No, you're going to mail in the keys. You're going to give the bank back the building. Better give them a $100 million building than a $200 million cash. So the banks are looking at massive losses on their commercial real estate. At the same time, they have massive losses on all their residential mortgages and government bonds. So the whole banking system is completely insolvent. And the Fed hasn't even raised rates anywhere near high enough to get rid of inflation. We actually need much higher rates than where the Fed stopped. And not only do we need the Fed to tighten more. Oh, I forgot I had my phone.
That's all right.
Turn that off.
So let
me finish this. But not only do we need the Fed, right? Not only do we need the Fed to tighten more, we need the government to tighten, because you need contractionary fiscal policy as well as monetary policy, right? You can't have one without the other, because the engine of inflation is the government spending more than it collects in taxes, because you're putting artificial demand into the economy. Now, it's worse when it's monetized by the Fed, when the Fed is printing the money to buy the bonds that facilitates this extra spending. But budget deficits are still $2 trillion plus per year. That's stimulative policy. And also look at the credit markets. Consumer debt is at an all-time record high. Credit card debt is at an all-time record high. Household debt, the savings rate continues to plunge. Everybody keeps spending. Well, that's the fuel for the inflation. What the Fed needs to do to put this inflation genie that it let out of the bottle on purpose, right? It's not like this happened out of left field. Not only do they have to contract the money supply, which is growing again rather rapidly, but they have to contract credit, and they have to change people's behavior. They have to increase savings and reduce consumption and spending. That's how you fight inflation. But we haven't done that at all. And if you go back to the very definition of inflation, which is an expansion of the supply of money, it also includes credit. Inflation is an expansion of the supply of money and the supply of credit. So credit expansion is inflationary, and we've had credit expanding the entire time that the Fed was fighting inflation, which means the fight has been inadequate. Now, why has inflation come down the way they measure it? It was 9%. Now it's 3%. Well, again, nothing goes in a straight line, right? So maybe it goes 9, then it goes 3, and the next move is 12, right? It's just in a wave up. The trend is higher, right? You'd want to buy the dip in inflation, right? If you're looking at that. But the main reason inflation came down was the market anticipated all the rate hikes, and that strengthened the dollar. The dollar index rose about 30%. And in that environment, brought down oil prices, commodity prices, and the strong dollar put a lid on import prices. So that helped. We also had a small contraction in the money supply after a major expansion. But
through QT then, eh?
Quantitative tightening, yeah, which is now pretty much ending. The Fed's rate hikes are over. So now the markets are starting to look at the rate cuts, which is going to weaken the dollar. So ironically, the Fed says, hey, we've won our inflation fight. We can cut rates. By indicating that, inflation is going to come roaring back because that brings down the dollar, right? It's actually loosening the financial conditions. But I think the dollar is turning. I think it's top. It's getting ready to fall. Commodities have bottomed. Oil has bottomed. We're going to start to see a big move up. And the Fed is in a box now because it's promised the market rate cuts. It can't, pull the rug out from under it. But when inflation really surprises, the thing that's going to be a big problem is we're going to be in a recession. In fact, we're probably in a recession right now. I know the economic data doesn't say that. We just got this, big GDP number, right? 3.3%. Unemployment is really low. But they were saying the same thing in the summer of 2008. They were saying we're not going to have a recession, even though they were in one. It's just that the government data didn't recognize the Great Recession that started in December of 2007. They didn't recognize it until December of 2008. So the government in December of 2008 came out and said, you know what? All the economic data we released for the last year was wrong. All the good data was actually bad data. We've been in a recession the whole time. And they went and revised down everything. So they could just as easily do the same thing now. They could come back and say, you know what? You know all those good numbers that we gave you? All those jobs that we said were created, they actually weren't created. We actually lost millions of jobs. And you know all that economic growth that we said was there? Actually, we were in recession the whole time. They could easily come back and do that. And I think it's likely that they will. And I think that the reason that Joe Biden is so unpopular, I mean, it's unprecedented how unpopular. But nobody has ever been less popular. And the same thing with Kamala Harris. She's the most unpopular vice president ever. Why? What did she do? I mean, I don't know. Could you name anything she stands for, anything she's done that would justify this degree of unpopularity? I think it's just the voters taking out their frustration on how bad the economy is. The economy stinks, and the American electorate tends to either blame or credit. So if the economy is bad, the White House gets credit. I mean, if the economy is good, the White House gets credit. If the economy is bad, they get the blame, whether it's their fault or not. The voters are just going to vote their pocketbooks. Remember Henry Carville, it's the economy, stupid. Yeah. Well, if you want to know why Biden is so unpopular, it's the economy, stupid. Right? So the economy is bad. So the media keeps saying there's a disconnect between the voters and the economy. No, the disconnect is between the data and the economy. The voters have got it right. The economy is awful.
Wow. So why not keep, or potentially as the Fed, the Ponzi going, so to speak? If the Fed starts lowering rates, or at least signaling that rates come down, now losses at banks start evaporating, start reducing the cost of borrowing, maybe start reducing some of those credit defaults, which you mentioned debt and delinquencies are higher now than where they were before COVID. So it does seem like there's some unsustainability with the spending. Even just this morning, we saw, once again, lower inflation and PCE numbers, yet higher spending. So it seems like the Fed should be in this position of cutting. Is it just your position that that will create substantial inflation again, or can we bail out the banks that way?
And remember that spending was financed in large part by a depletion of savings, which are already low. So it's more debt, it's more credit. But there's a reason that Ponzi schemes are illegal. and that's because they can't continue indefinitely. They always fall apart. So there's always people holding the bag that end up losing money. And so, no, they can't keep the Ponzi going indefinitely because it's a Ponzi by definition. Now, governments can generally get away with it a lot longer than you and I could because they protect themselves. They kind of write the rules, but they can't, suspend the rules indefinitely. And the reason I think they can't really get away with it anymore is the way they've gotten away with it in the past is by creating inflation. That's how they do it, right? Quantitative easing is inflation by definition. It's just a better name. It's a euphemism. Because if the government said our policy is to create inflation, people would, well, I don't like that. I don't like inflation. That makes prices go up. So if they just call it quantitative easing, they don't get a lot of enemies. Although in Europe, they were even more abrupt. They kept saying, or even here, we need more inflation. They actually told us that. They said the problem is we don't have enough inflation. Like, we have a lot of problems. That was not one of them. Lack of inflation is not your problem. But the government said it was, and they had to solve it by creating more inflation. So that's what they did. Every time we had a problem, they created inflation to solve it. But they've created so much inflation at this point that inflation is now the biggest problem. And how do you solve the inflation problem with more inflation? You don't. So when we get the next economic downturn, when it's going to happen in an environment where you still have high inflation, right? It's not going to be 2% or any, close to it. Now, inflation's, let's say 4 or 5%, whatever it is. And unemployment really spikes. The banks start to fail and they print a bunch more money. And now you take that inflation rate and send it right into the double digits. That's it. I mean, you're done.
How long
the dollar
away?
crashes. I mean, the bonds crash, because the bond market, remember, you look at that chart of the bond market. All the time the Fed has been doing these policies, we've been in this secular bull market for bonds, which started in 1980, 81 and ended in 2020. So you had a 40-year bull market in bonds, which is now the beginning of a bear market, which who knows how long it's going to last. It's going to be brutal. It's going to be around for a long time. So now if the Fed is going to try QE in a bond bear, I don't think it's going to work. I think the next time the Fed prints money to buy bonds, bonds are going to go down. And of course, what are really going to go down are not just treasuries, but the bonds that the Fed is not buying. Because treasury buying of, the Fed buying of treasuries will offset some of the decline.
It should pump up prices.
Right, but they're not going to buy all the treasuries, so other people would be selling. But what about the muni bonds? Who's going to buy them? What about corporate bonds? Rates are going to surge across the spectrum, but nobody can afford to pay. I mean, just look at the national debt. This is where it screams at you. The national debt is $34 trillion. It's growing by $1.25 trillion. In calendar 2024, something like $12 trillion of that matures, has to be rolled over. In addition to the $4 trillion of new borrowing, that's $16 trillion. Who's going to buy that? Right now, the Fed is selling. Fed's adding to the problem. You know who else is selling? Social Security. They were one of the biggest buyers of treasuries during that bull market. They're now one of the biggest sellers because Social Security, because so many people have dropped out of the labor force or retired, Social Security doesn't collect enough money in payroll taxes to cover the cost of the benefits of the people who are already retired. Not to mention the ones who are going to retire next week or next month. So they're selling treasuries. The other big buyer of treasuries were foreigners. Japan, China, they're not buying. I mean, they're selling too. So this is a huge problem. It's a huge bond market bubble.
So you think there'll be a lack of buyers and as they return to QE and increase the supply substantially of bonds, there won't be enough bond buyers.
There already isn't enough bond buyers. That's
so
why
rates skyrocket again.
That's why they're going to go back to QE. And again, the other point, interest on the national debt is about now the same as national defense. A year ago, it was nothing. It was $200 or $300 billion a year. Now it's almost $1 trillion. In another year or two, interest on the national debt, if interest rates just stay where they are, right? Don't go higher, which they could do. If they just stay where they are, interest will be more than Social Security or Medicare. It'll be the single biggest expense. In a couple of years, about 50% of every dollar the U.S. government collects in taxes, income taxes, Social Security taxes, 50 cents of every dollar will be needed just to pay the interest on the debt. Not pay back any of the debt, just the interest on the debt. And before the end of this decade, assuming that we can get there without a crisis, which I don't think is possible.
Do you think it's imminent?
Oh, yeah. Well, it's been imminent for a while. But before the end of the decade, which is not that far away, 100% of government tax revenues will be for interest on the debt. Now, obviously, that circumstances can't exist. You can't have a government that simply transfers money to bondholders and has nothing left over for anything else. I'm not talking about, not even to pay the salaries of the people that clean the toilets in the Capitol. Nothing. No money for anything except interest on the debt. So this is how much this thing is ballooned out of proportion. Even Janet Yellen, a year ago or a year and a half ago, when she was asked if she was worried about the $30 trillion debt, she said, no, the debt didn't matter as long as the interest payments were low. That's what she said. I remember at the time saying, well, doesn't she realize that those interest payments aren't fixed? The Fed is going to be raising rates. I'm only worried about it when interest rates go up, well, then you should worry about it now because interest rates are going to go up. But this is why the Fed is going to stop cutting rates. It's not because it's won its battle against inflation. It's lost. It's going to surrender. It's cutting rates because nobody can afford to pay. It's going to cut rates to prevent default, insolvency, right? But that's going to lead to runaway inflation.
Could your son be right, where artificial intelligence expands GDP so much that our debt just doesn't matter anymore and everything's great and there's no recession? What are the odds of us being able to escape massive pain? And you mentioned to yourself layoffs and unemployment, which is obviously a lagging indicator.
Yeah, I mean, obviously, my son thinks the odds are high. I don't know why he's that confident, but I think the odds are very low. I mean, look, obviously, if AI, leads to such an enormous increase in productivity, I mean, in theory, right? If everybody can have their own AI that was so super intelligent that it can conjure up anything you need, almost like, remember Barbara Eden from I Dream of Jeannie, right? Whatever Tony Nelson wanted, she just blinked and he could have it, right? Well, if AI could do that, I'd like a brand new car, and the AI just creates it from the molecules in the air. It creates your food. It gives you everything you need, and nobody has. Well, sure that no one needs anything. I mean, we don't need money, right? The problem isn't money; it's stuff. We need things, right? We need food, we need shelter, we need clothing, we need entertainment. There are a lot of things that we need, and we can't have them unless we produce them, right? We don't have to produce them ourselves. Somebody has to produce them, and we have to do something of value to exchange with the productive people so that we can have things. But if nobody needed to work, if we could just have all the things without having to do the work, well, then the problems are over, right? We don't need anything, and then it doesn't matter about any of this, right?
And you just put your goggles on and get your stimulus check. And
you don't need a stimulus check. Your goggles give you whatever you want, right? The AI is so super intelligent that it's almost like a god. It has harnessed the powers of the universe, the force, right? I mean, this is like the ultimate, where it could just give you what you want. You don't have to work to earn something. And of course, people think governments give them things. Government doesn't have anything. It has to take it first. It has to take it from somebody who produced it to give it to somebody who didn't. But in the world of, all-powerful AI, everybody can have everything, because you're every AI. So obviously, we're not going to be there. But to the extent that, look, if a factory can, get rid of 100 workers and replace it with, an AI chip or whatever, it's a computer chip,
an Elon robot,
then productivity goes up. If we could have a much more efficient healthcare system because all the doctors are robots and they diagnose you immediately, or they figure out a cure so you don't even need an operation. They're so super smart that they just, here, take this pill, it'll cure everything that you have, right? All our healthcare costs go down. So yes, you could say that we could get a get out of jail free card from this productivity miracle. But look, I think that there is a lot of potential in AI, and it may take many more years or decades for it to fully develop. And in the meantime, to the extent that AI does eliminate the need for workers, the way governments are set up today, those workers just might immediately start getting government money. It's not like they're going to do something else that's valuable. They're just going to start collecting government money. And that's more inflation. And also, these programs like Social Security and Medicare, they depend on people working for a paycheck. If I replace my workers with a robot, there's no more FICA, right? Because, and so the government loses a lot of that tax revenue. And if they start spending money because they're giving everybody like a stimulus check because they no longer have a job. So in the short run, there could be a negative to the AI, not because of capitalism, but because of government, because of socialism. But the other thing is that AI is not just in America, it's all over the world. And, to the extent that the world is a lot better off, then, that could be a negative for the US because we kind of depend on everybody else being in trouble because they buy the dollar, like as a safe haven. People are worried about Europe, they're worried about Japan, and when they buy the dollar.
So we're the best of the worst, so to speak. So people buy
there's
the
a
dollar.
Perception of that, right? So if things get better, they don't need it.
China.
But also, but also, America is uniquely vulnerable because of the dollar's status. I mean, it's like, you live by the sword, you die by the sword. I mean, the dollar status is the source of our standard of living, right? So right now we benefit from the dollar being the reserve currency because we don't have to work as hard as everybody else. We don't have to produce because we could print money instead. And we can exchange that money for the stuff everybody else produces because everybody wants our dollars because they're the reserve currency, not because you can do anything with them. We have huge trade deficits, $1 trillion a year. So the source of our strength is actually going to be our undoing because once we lose that privilege, the whole economy collapses because we've built it on the foundation of that privilege being there. We have this service sector economy, right, where everybody is in the service sector. Well, that's only possible because we don't have to manufacture as much, because we can rely on China or other countries to manufacture for us because they need our paper money. But if they don't need it anymore because the dollar has been demonetized as a reserve currency because we've created too many of them, we've created too much inflation because we have too much debt, now we can't import anymore without exporting. And so now the economy doesn't work. I mean, imagine a Walmart with nothing on the shelves. I mean, so all those workers at the store are going to lose their jobs if there's nothing to buy, right? Those jobs are predicated on there being stuff on the shelves. Right? And a lot of the service sector economy is predicated on you already having stuff that you bought. But if you don't have the manufacturing, if you don't have the actual goods, then you can't afford the services. And the whole thing is going to just implode.
So the economy is on the verge of collapse, the dollar crashes. I guess two things to ask is, what can I as an individual do to protect myself? And then beyond that, beyond just me covering my ass, like what can we as a society do to kind of remove ourselves from this centralized government and this impending doom?
Yeah, well, I've been trying to help people protect themselves from this crisis for a long time. And because we haven't had the crisis, people think, well, Schiff's wrong, right? He's preparing for, this crisis that's never going to happen. No, I'm preparing for a crisis that is going to happen. It's just happening later. But all of the things that make the crisis inevitable, all those problems not only still exist, but they're bigger. So the crisis looms even larger than it did a decade ago. We've just blown a bigger bubble. But while we've kicked the can down the road, all these problems have gotten so much worse. And so what this means is that when we have the crisis, it's going to be much deeper because we've dug ourselves into a bigger hole. Now, again, maybe AI could soften the blow. Anything that the free market could do to counteract the damage that government does. I mean, that's basically the dance that we do. Capitalism is a positive force for good. The free market, which is constantly finding ways to increase abundance, make things better, make things cheaper, increase living standards. And then you have governments that are working at the exact opposite purpose. They're trying to undermine productivity. They're trying to add unnecessary burdens and regulations and red tape. They're trying to counteract the benevolent forces of the free market that want to allocate resources and labor to their highest and best use. Politicians want to allocate them to their friends.
Sure.
Whoever's going to give them the most donations. So
FTX.
Yeah. So
what do we do?
government is acting, and then you have the free market that is trying to lower prices, and the government that creates inflation to push them up. So whatever the government, the free market can do to undo the damage of government, but you can only imagine the world that we would live in today if government had stayed at the same size it was in 1900. Had we never had an income tax, had we never had a Social Security, had we never had a Federal Reserve, had the government stayed the same size it was in 1900, which was less than 5% of our GDP, had we had no government borrowing, right? Imagine the world that we would live in.
What would
you
it
wouldn't
look
even
like?
recognize.
I mean, would we have less control of domestic policies, international policies? The idea of government is they're here to protect us, Peter.
Yeah.
Who would protect us if the government wasn't as massively large as it is
like
now?
I said with my bank, every customer could have taken out all their money, and then the government came in to protect them, and now no one gets any money. For almost 2 years, no one's gotten their money now that they have government protection. When I was protecting them in the free market, everybody had access to all their money at all the time. But what the world would look like, look, I think that had the government not gotten involved, I think that the typical family today would have one breadwinner, most likely the man, but it could be the woman. But you wouldn't have a husband and wife both having jobs. People wouldn't be moonlighting. You wouldn't have people with 2 or 3 jobs. My guess is by now, we'd probably be down to maybe 3 or 4 days a week working. So the weekends would probably be maybe 4 days long, 5 days long. We'd be so much more productive. We'd have a much higher standard of living. God knows what inventions we would have come up with, what drugs we would have come up with, without the FDA, screwing all that up. I mean, maybe we would have cured cancer by now. Who knows, right? Well, maybe we would have developed AI a decade or 2 ago. I don't know. But I used to watch the Jetsons when I was a kid. Did you ever see that show? So yeah, the Jetsons came out in the 60s, and they just assumed that we would just keep expanding the way we were back then. But I think George Jetson worked 2 days a week. He was complaining about these 2-day work weeks are killing me. And he would say, look at my button pushing. I had to push the button 4 times yesterday. Like that's all he did, right? It was his job. He worked at this place, Spacely Sprockets, right? They made sprockets. So who the hell knows what a sprocket is, right? It was like a widget, a sprocket. But I think it would be something like that. I mean, maybe we wouldn't be flying around in, the flying cars, but we would all be working a lot less. We would have a much higher standard of living than we do now. And if you look at, America relative to the rest of the world, Americans had a standard of living in 1940, 1950 that was unrivaled. There was nothing like America. American capitalism created the middle class, which didn't exist in Europe. I mean, Americans used to go to Europe, and there was an expression, the ugly American. And the reason that we were ugly is because Americans would go there, and all of a sudden they'd be rich because everything was so cheap there. And so we would act kind of arrogant when we were there, just, not on purpose. But everybody was rich when they went to Europe because they were poor in comparison to Americans' middle class. But today, Americans don't live that much better than the rest of the world. In fact, there are a lot of countries that have higher standard of livings than America. And the only reason our standard of living isn't much lower is because of all this debt. But that just means that in the future, it's, our standard of living is going to come way down when this bubble bursts and we can't live beyond our means anymore.
Do you think the wealth gap is just going to widen, or will there be some great reset that gives everybody that opportunity to, help reduce the size of government and get back to a normal playing field?
Yeah, the wealth gap, I think, is going to continue to widen as a result of the Fed and government policy. Remember, the biggest wealth gap is in socialism or communism, right? You have a few people who work for the government that have all the wealth, and everybody else is in abject poverty, right? And yeah, there are a few people that are connected to the government that manage to get something. Capitalism is the great equalizer. That's what narrows the gap, and it creates a lot of wealth. Now, you're going to have some very rich people in capitalism, but they earn it. Because in capitalism, you're rewarded in proportion to your contribution. The more you benefit society, the more money you earn, because that's what profit is. Profit is the gain that's derived from doing good. right? If you're able to combine the resources in the economy that are scarce, right? The resources are scarce. So if you're going to use these resources, you need to use them efficiently. And if you could take these resources and create products and services that people value more than the resources it took to create them, you get rich because people buy what you have to sell. But a capitalist can't force somebody to buy anything. They have to voluntarily do it. People make a choice. I want to own that. I want to buy that because it's going to make my life better. And I'm going to give money to the company that made my life better. So the more money you collect, the more people's lives that you've improved. That's the invisible hand of capitalism. And that's the beauty of the system. But yes, I mean, there are going to be people that work harder, that are smarter, and do more good. And they're going to achieve more wealth. But you always have people who become envious of other people. And the politicians play on that envy, right? And they say, these people are rich. That's not fair. You should have more money. Vote for me and I'll steal their money and give it to you, right? Because you're more deserving. You're more caring because they have their money because they're greedy, right? They're just ripping people off and exploiting their workers, right? That's what they tell you to get the votes. And people, yes, the reason I'm not rich is because I'm a good guy. I don't exploit people. I'm not cutthroat and evil, right? Like those rich people are, right? Because that's a way to kind of justify the fact that you're not rich. Instead of saying, I'm not rich because I don't work as hard. I'm not ambitious. I'm not as smart, right? That's why you're not rich.
On that note, Brett Whitten over from ARK Invest. I know you love ARK Invest and Kathy over there. Slightly different opinions, but they argue that there's a chance the Federal Reserve might be biased in cutting interest rates substantially, maybe even before the election, to preserve the stability of the dollar by preventing potentially a Trump election and keeping their jobs. What's your take on that?
Well, I agree with the idea that the Fed wants to reelect Biden and that they don't want Trump and that they know that the economy is going to be key. And so one of the reasons they'll try to pump it up between now and November is to help Biden. And how do they do that? Well, they need to cut rates. They need to go back to quantitative easing. They need to, create some more phony wealth or try to artificially boost up the economy so that people feel better and vote Biden. So yes, I would agree that is, part of the reason that the Fed is going to cut. It's not the only reason or part of the reason they're going to go back to QE. But what they're hoping is the negative effects of that, meaning the spike in inflation, won't happen until after the election. So basically, the voters won't realize what they're getting when they buy Biden, right? Because they're in for a shock in 2025. When the negative consequences of the Fed's actions show up. Of course, though, the government will never accept responsibility, right? When, like during COVID, they print all this money and create massive inflation. And then we see the consequences of it with soaring prices. And they never accept responsibility for their actions. It's like, yes, well, we printed all this money just to send out these stimulus checks and everybody spent them. And that's why prices went up. Right? They don't want to accept responsibility. They act like this just happened coincidentally. Oh, it's all the supply bottlenecks. That's the problem. Look, if we gave everybody $1 million, right, and then everybody ran to the Ferrari dealers to buy a Ferrari, obviously Ferrari prices would go way up, and you would say, well, it's a supply problem. There's not enough Ferraris. Of course, there's never enough Ferraris. There's too much money. Right? You can always claim it's a supply problem, right? If you just print a bunch of money and give it to people, yeah, they want to buy stuff. But supply is always the problem because stuff is scarce and limited. It's the demand that's the problem. When you give people a bunch of money to spend, the only way to get an equilibrium is for the price to go up. So if the government just doubles the supply of money right away and the supply of stuff is the same, everything has to double in price. so that the economy works, right? It's like if we have an auction and in one room everybody has $100 and that's all they have to bid, and you have the same merchandise, and you have another auction, everybody has $1,000 to spend. Where are the prices going to be higher?
Yeah, that's
right?
a great analogy. Yeah,
Yeah,
I mean,
it's where because the limiting factor is the stuff. The money is just how we allocate the stuff, right? And we set a price based on the quantity of money, the quantity of stuff. You know, now different things will have different values depending on how much people want something versus something else, right? So some prices can go up, but then other prices have to go down. They all have to adjust. But all of a sudden, everybody has more money like they did during COVID. And especially worse because in COVID, we gave people money to do less work. So, because it's the work that produces the stuff. So if you stop working, you don't have the stuff, right?
worst of both case scenarios.
You're supposed to, so what we should have done is told people, okay, you can't go to work because of COVID. So you're not going to get any money either because you're not working. So you can't spend. We told people, don't go to work, but here's money, go out and spend it. Spend more money while you're staying at home than you used to spend when you actually had a job. So it was the worst possible combination of monetary and fiscal policy. I called it out at the time. I said, this is an inflationary cocktail. This is terrible. And, you know, of course I was right.
So to distill all of these issues that we have, it sounds like you've got mortgage-backed securities that are in the toilet, office real estate, multifamily commercial real estate potentially in the toilet, maybe not so much multifamily as office, obviously. But you've got these massive issues that are creating revaluations and losses at banks. Your thesis is that the Fed may prop up Biden here, which would continue fiscal expansionary policies and basically worsen a 2025 reignition of inflation. And then when the Fed finally realizes that they've reignited inflation and you still have the bond issues, a lack of bond buyers, you've got the commercial real estate issues, and now inflation, combined with the debt and the debt instability, now you actually have the real unemployment skyrocketing because companies have to lay off just to have any earnings left over, and you have a real crash.
Yeah. I mean, you have to understand that the Fed causes the problem by keeping interest rates artificially low. That's the source of the problem, because in capitalism, the interest rate is very important, and the price has to be right, and the price has to be determined in a free market. You never want the government to set a price. And we understand that for most things. Like, we don't have a bureau that decides how much milk is going to cost, or how much gas is going to cost, or how much anything is going to cost. We let the market determine that, right? Because if the government picked a price, it would guess wrong. And either we'd have a shortage, we'd have a surplus, right? But for some reason, we've decided that interest rates, there we need a Politburo. We don't want capitalism. We just want a bunch of men in a room to get together and decide what they think the price should be. Now, once we've done that, it's not a surprise that they always think the price should be lower than it really is. Because low interest rates benefit who? Debtors, borrowers, right? Artificially, we got this consumer economy. So there is a bias to wanting rates lower than they need to be. But by doing that, by setting a rate that's lower than where the free market would have set it, you are causing problems, structural problems that get worse the longer interest rates stay low. Now, every time the Fed tries to raise rates back or normalize them, that's what exposes the problems that the Fed has created. And now the market tries to fix the problems by reorganizing resources, repricing assets, and that causes a recession or a crisis. The government's response is always, oh my God, we can't allow this cure. We need to make the disease worse. So now let's print more money. Let's lower interest rates even lower, keep them there even longer. So because of QE1, QE2, QE3, COVID stimulus, all that, the problems in the US have never been greater than they are right now, right? And everybody who credits the Fed for solving the problem doesn't understand the problem, or that the Fed has made it worse. And so right now, all the warnings that I was giving a decade ago or more, the problems that I warned about haven't gone away, they've gotten worse. But the people who didn't understand them still don't get that. And they're still looking to the Fed to solve the problems that the Fed creates.
If only there was some sort of digital currency that the Fed couldn't manipulate. So
yes, Bitcoin fixes this. That's what everybody. If only there was this. But you know what? But Bitcoin doesn't do that. Bitcoin. Again, Bitcoin is just one of tens of thousands of digital currencies. Except Bitcoin isn't even a digital currency because it's not used as a currency. It's a digital asset. But it's a digital asset with no value because it doesn't do anything, and people claim, well, that's the same thing as gold. Gold doesn't do anything. Yes, it does. Gold, look, this watch is made of gold, right? So their gold is used for this watch. You have a cell phone, there's a little gold in there. In fact, so there's gold is used, but yes, there's a lot of gold that isn't used. It just sits there in a vault. But what it's doing is it's storing the value of its future use. That's what that gold is doing. Every ounce of gold that's stored could be used in industry and maybe will be used in industry at some future date, right? But when you're storing your Bitcoin, you're not storing anything that anybody can ever use because you can't do anything with your Bitcoin. All you can do is hold it. And there's 20,000 other currencies that you can also hold that don't have any value. But actually, if you wanted to use a cryptocurrency as a medium of exchange or as a unit of account, there are hundreds of them that do it much better than Bitcoin. And who knows what new one is going to be created. I mentioned, my son lost interest.
Schiff coin, yeah.
Well, my son lost interest in Bitcoin. Look, AI is coming, right?
Tell us about that. Why did he lose interest in Bitcoin?
I don't know. It's just a fad. People lost interest in the hula hoop. The pet rock. What happened? Once upon a time, people used to stuff phone booths. Now we don't even have phone booths. But but people stopped stuffing them long before we lost the phone booths. Look, it's a fad. But look, I think people made money, just like people made money trading Beanie Babies. People jumped on the bandwagon. Why did people buy tulips in Holland? So it's happened. People, it's been a giant bubble. Again, part of the Fed, a lot of bubbles were inflated due to the Fed's cheap money and people looking for alternatives. But Bitcoin doesn't fix it. Look, if everybody, with Bitcoin, the problem is, so you take something that inherently has no value, and we all just pretend that it has value. We agree it has value. And because we agree it has value, we want it. And because we've limited its supply, right, the price goes up. If more people want to buy it, and there's no increase in supply, or the supply it increases slowly, the price is going to go up. But the problem is, what happens if people stop believing? What happens if new people don't want to buy it? It implodes. If it's all about buying and holding it, and the only use case is to hold it, and you only hold it because you think somebody else is going to want to pay you more for it in the future. Because if you want something, if you have Bitcoin, but you want a car, you want food, you want to buy a house, you want to take a vacation, you got to sell some Bitcoin. The grocery store doesn't want your Bitcoin. And even if they took it, they'd have to sell it because they have to pay their workers their salary. They got to pay rent. They got to pay taxes. So eventually the Bitcoin has to be sold. And if there's not new people to buy it, then the price is going to implode. That's what they're doing now with these ETFs. They're hoping to draw in new buyers because they need new buyers to keep it going. And the higher the price is, the more money has to suck in to sustain it. But the whole thing could collapse. If people stop buying, one Satoshi could crash the market. If I want to sell one Satoshi and it's not a buyer, Wherever that Satoshi trades sets the market for all the others.
Right, last trade. So is it because the dollar, let's say, is the reserve currency, it always has that imputed demand, whereas Bitcoin doesn't necessarily always need to have that imputed demand because it's not a reserve currency? Then should you make it a reserve currency?
Well, it's not a currency. It's not a reserve anything. But the dollar has that demand right now because everyone in America will sell you whatever you need and accept dollars. That is the unit of account that we use. That is the medium of exchange.
Because everyone believes in it.
Everybody believes in it. Now, at some point, they may stop believing. They will stop believing. But one of the things that keeps the belief going is the legal framework. Because remember, there's a U.S. government that collects taxes.
And a big military.
Right. But the military isn't the thing. It's paying for the military. So the U.S. government takes all those taxes. And taxes have to be paid in dollars. And so every American who doesn't want to go to jail needs dollars because the government said, you give us these dollars. I had an example that my dad told me a long time ago of how this works, which, is a good example. Think about a bunch of kids in a schoolyard. And there's one bully that beats the crap out of everybody. And the bully says, you know what? I'm going to come up with a little note. And if you pay me $5, I'm going to give you this note. And this note says, you paid the $5, you won't get beat up. Right? And so you give me and so every time I come around, you got to show me this note. If you don't have it, I'm going to kick the crap out of you, right? So all of a sudden, people want to buy these notes because if you own these notes, you're not going to get beat up. Well, now, the people in the schoolyard will value those notes. If you don't have a note, you might, hey, I'll give you my lunch for your note, right? Because, but what gives the note value is the fact that the bully is going to beat you up if you don't have it, right? That's the U.S. government. The U.S. government is like, look, you got to have my paper. You got to have these dollars. Because if you don't have them, come April 15th, we're taking your ass to jail, right? You need these things. So everybody has to get these dollars because that's what the government takes.
That's really interesting. So what you're saying is because Bitcoin doesn't have a bully who is forcing you to choose that.
Exactly. There's no one that can kick the crap out of you if you don't have Bitcoin, right? The government, in fact, the government won't take your Bitcoin for taxes. You have to sell your Bitcoin to get dollars. That's the only thing that they will accept, is U.S. currency. And so that gives it value. And that's the same thing with every other currency. You have a sovereign nation that says, this is how you have to pay your taxes.
Right.
And so everybody needs to earn these so that you can pay your taxes because that is the law. So that helps keep it going. But that doesn't mean that you can't have hyperinflation. I mean, they have taxes in Zimbabwe. They have taxes in other countries. If they print too much money, it's not going to matter. Right? They're going to
weaker bully, I guess, huh? But what about the other strong bully in the world, China? Should we invest and buy the dip in China and the Chinese consumer and Alibaba?
Yeah, look, the Chinese stocks have gone down a lot. I own some. I mean, I really would like to own more than I do. But part of the risk, the political risk, is that the U.S. government comes up with sanctions and basically says, you can't own these stocks. It forces you to sell them.
Is that a Trump reference?
Well, Trump did it, but Biden didn't do it. I mean,
Who would be worse for investing in China?
Oh, I assume Biden is worse for most things. But, it's unconstitutional that the U.S. government can tell you that, you can't own an investment. But if the government forces Americans to divest themselves of Chinese assets, it just benefits the person who gets to buy the assets. It might actually benefit China if they get to buy their assets back, right? They sell them to Americans and then they buy them back cheap. But look, China is the rising economic power. And yes, they are experiencing growth pains. They have problems. Some of them relate to they're hitching their cart to our wagon. I mean, they're accumulating trillions of dollars, and they're financing exports. They're basically vendor finance. They vendor finance trillions of dollars of exports to the United States. That was a mistake. But these are growing pains. China is on the ascent. America is on the decline, from where we were as a world power. So we're on a different slope, unfortunately. They went from total government, complete communism, and they are introducing elements of capitalism into a communist structure. We went from almost pure free enterprise, and we've been gradually introducing socialism. So we're kind of, moving in opposite directions. We started at different points. The key is, have we passed? When do we get to the point where we're more socialist than they are, right?
You think that'll happen?
Well, in a lot of things, it's already happened. I mean, it hasn't completely happened. But if you're like a small entrepreneur, you're a young kid, want to start a business, general business,
Join FINRA.
Well, forget about FINRA. But if you're 20 years old and you want to go out and start a business, it's probably easier to do it in China than it is here.
I'm shocked by that. Why?
Yeah, I mean, you have fewer forms and regulations and permits and licenses. And it's not just the federal government that licenses you. You have states and cities. There's all kinds of things, that, let's say you just wanted to, open up a barber shop and cut hair. You just can't do that. You need to get licensed as a hairdresser, as a hairstyler. You need to go to school. Wait, why can't I just cut people's hair? What the hell, It's like, what's the worst thing that happens? You get a bad haircut, you don't come back, a lot of people found out, my wife started cutting our hair during COVID. She did a pretty good job. She never took any lessons. She just has a little aesthetic, looks at the hair and, but yeah, I mean, it's the government makes it a lot harder. And then you have to keep all kinds of records. Yeah. When my grandfather came to this country, my father's father, he became a carpenter. He came here, he was 13, 14 years old. Didn't speak any English, didn't have any money. No welfare, no food stamps, no government assistant. He survived. And he started a small business, hired some people. I mean, he never became rich, but he was self-employed. But I don't know that he could have survived if he had to deal with workman's comp and payroll and tax, Social Security. I mean, he just probably collected some money and paid his workers with cash. He earned cash, and he probably didn't even keep records. He didn't pay any income taxes. I mean, that stuff started in the 30s, but when he came here, 1900, they didn't have any of that. 1890s, whenever he got here, it was like...
Wow.
Wow. You didn't have, I mean, you wanted to start a business, you just started a business. You didn't have to keep all these books and records. Of course, it's easier to keep books and records now because we got computers, thankfully. They didn't have any of that stuff back then.
Do you think that there's a chance we can continue to see spending the way it is now? The stock market continues to run into the election. Rates come down. And despite the fact that we're spending more because we've expanded supply so much through greater manufacturing, that we actually end up with deflation or...
Well, first of all, manufacturing has been in a recession for about 2 years.
Yeah.
So we're actually producing less, not more. We're importing more. So
is capacity going up though? Maybe utilization.
No, it's not. It's not. Now, some companies are starting to introduce AI in a way that is helping productivity, but we're not seeing it in the end results yet. I mean, maybe things would be worse if we didn't have these gains. And there's a major investment going on right now in capacity, in computing power. That's why NVIDIA's stock, everybody is buying all these GPUs. And so they're making a major investment that may pay off in the future and may not. I mean, who knows? Maybe people are overestimating how this thing is going to be. I don't know, But no, it's not going to happen in the next year. Now, does that mean that the stock market can't keep rallying? Of course not. I mean, the stock market could keep rallying. But the dollar is going to have to break, because the only way to keep the stock market going up is not to fight inflation, to surrender to inflation, which undermines the dollar, which ultimately undermines the whole U.S. system because it's all predicated on the dollar. The deficits are going to keep rising unless, and the government's going to have to step up QE to fund them, especially as I mentioned, Social Security deficits are going to get bigger. I mean, nobody is talking about cutting Social Security benefits.
Very politically unpopular.
Nobody wants to raise the payroll tax. In fact, all we've done is cut the payroll tax. That was one of the things we did in COVID. Every time there's a recession, let's lower the payroll tax. And now we're forgiving student loans. Where's that money coming from? Again, that was an asset that the government owned. But remember, every time we forgive a student loan, it's inflationary. Because when people are paying student loans, they're not spending that money on goods and services. They're sending that money to the government, which is reducing the deficit or making it smaller. But when you tell somebody who has a student loan, you don't have to pay that loan anymore, well, now they have more money to buy stuff. Right? You've expanded the money supply. And it's inflation. And who's paying for it? People think that student debt relief is free. No, it costs everybody money because the price of everything that you need to buy will go up the more student loans are forgiven. There's almost $2 trillion of student loans outstanding. And because the government is forgiving them, they're growing even faster. Because there was always a moral hazard. I mean, that's the problem where I mentioned how government always does harm. Student loans is one of the best examples because in the 1960s is when all this started. Right? Nobody borrowed money to go to college. My father and mother went to college. None of them took out loans. Now, my father was the youngest of 8 kids. And then my grandfather was a carpenter. He said they couldn't figure out if they were upper lower class or lower middle class, but they were not even, middle class. Yet my dad didn't need any student loans.
Wow.
And his parents didn't pay for college. He had a summer job. He waited tables. And that's what his friends did. There was an old expression, I'm working my way through school. Mm-hmm. That's what people did. Yep. Now they borrow their way through school. But the reason we got these student loans is during the Vietnam War days, the voting age was initially 21. They lowered it to 18. They said, well, if you're old enough to fight, you're old enough to vote. So which is BS, but they lowered the voting age. So now you have all these people who are 18 who are voting. Well, what are 18-year-olds doing? They're all going to college. How do you get their votes? Let's give them loans. Let's have them do it. So this is what they told people. Don't work over the summer. Have fun, right? Have a vacation. Go to Europe. We'll give you the money for college. We'll loan it to you. Pay it back later when you've got a great job, right? So this is what started it. What started these student loans. Now, the minute the government started giving kids money to go to college, the colleges were like, whoa, we could raise our prices. And they started increasing prices because of the access to money. And they started throwing things in to college, nicer dorms, nicer gymnasiums, different things, because the kids had the money. Well, then tuition went up. And then the government kept saying, oh, college is now more expensive. We need bigger loans. We need more money. I went over, I did an article about this years ago. I looked at the tuition in Harvard because you can go back to 1700 or 1800. And Harvard's tuition would stay the same for 30 or 40 years in a row. Exactly the same. Then it would go up a little bit. Then it would stay the same for 30 or 40 years, right? It's not like now where they raise it every single year, right? So before the government got involved, college was affordable, right? Nobody had to borrow money to go to college. It was, it wasn't cheap. Maybe you had to get a job. Now, if you were rich, you didn't have to work. Your parents could afford to pay you. And it wasn't anywhere near as expensive as today. But the government came in with student loans to make college affordable. And they made it astronomically expensive. And in fact, not only did government artificially increase the cost of a college degree, right? They made a college degree much more expensive. They also destroyed the value of it. Because the government loans all this money to kids to go to college, everybody goes. Mm-hmm. When my father went, most people didn't go to college. You just got a different type of job because most jobs didn't require a college degree. So if you actually got a college degree, it had some value. But now everybody gets a college degree, right? So they used to say hey, you got to go to college, right? Otherwise you're going to be working at McDonald's, right? Well, now you got to go to college to get a job at McDonald's, right? Because they all have college. I don't know if you ever saw this. I did a video. This is about 12 years ago. You go on YouTube and you put in Peter Schiff College, right? And I walked around Bourbon Street in New Orleans one day. I'm down there for this conference. And I went to all the bars and the strip clubs and, whatever was there. And I talked to the people that were, the bouncers, driving the petty cars, cleaning the trash cans. I asked everybody, did you go to college? When did you graduate? What was your major? And everybody I talked to had a college degree. Everybody. And everybody had debt. But nobody had a good job.
Interesting.
Some of them had multiple. I mean, you'll laugh. You watch this thing. Yeah. But the government did this to people. And now you have the government saying, oh, look at all these students. They have all this debt. This is terrible. Why do they have all this debt? They never could have gotten that debt in a free market. The only reason that banks loaned them the money was because the government guaranteed it. And now the government makes the loans. And think about this. You can borrow money. It doesn't even matter what your degree is. It doesn't even matter what your GPA is, right? You can go to college and major in, women's studies, or gender equality or some whatever kind of nonsense. And you could even get a master's degree in it. And you could borrow all this money. The same as if you're, doing mathematics or computer science or engineering. They don't care. And they don't care what your grades are. You can be flunking at, as long as you pass, you can keep borrowing the money. And you can go to school 4 years, 5 years, 6 years. You can keep changing. I mean, it's ridiculous. The free market would never screw something up this badly. And who benefited from student loans? Because it wasn't the students. They suffered. It was the colleges, universities that got to overcharge the students. They're living high, right? They're making all the money that everybody is borrowing. And the country is poorer because all of this money that could have been used to finance the building of factories, right? Productive investment was loaned to students to blow in college, and waste 4 or 5, 6 years of their lives when they could have been out working, doing something productive. Instead, they were just getting drunk.
How does Gen Z get ahead today? Your children, for example, 8 and 10, I believe. How would they make it in a world like today?
My kids made it because they won the lottery of the sperm lottery, right?
So how does a normal child that age make it?
Yeah, no, it's going to be difficult. Some of them might leave the country to make it.
Really?
I mean, if there's more opportunities, look at what's going on now down in Argentina. I don't know
with Javier Milei.
Yeah, I mean, look, if this is the beginning, look, you go to 1900. Argentina was one of the richest countries in the world. Per capita, I mean, there was an expression, riches in Argentine, right? I mean, they were making a ton of money. They were very wealthy down there. And socialism destroyed the country. They bankrupted themselves. They finally elected a true free market, libertarian. He walked right out of the pages of an Ayn Rand novel. We've got, as a president of a country. Now, why did Argentina elect somebody like this? Well, because it's a basket case down there. They've had so much socialism for so long that they have a belly full of it, right? And they're just barfing it all up, right? We're not there yet. We're not willing to elect a guy that's promising freedom. We still want to elect people that are promising free stuff. The Argentinians don't want any more free stuff because they know how expensive it is, right? They can't afford any more free stuff. They want to be left alone. They want the government to get out of the way. Wow. And so to the extent that these reforms stick and Argentina stays on that path, a lot of Americans may be moving down there, maybe me.
Wow. Because they had to go through massive economic pain, 40+%
yes.
poverty to, I guess, come to the recognition that either their currency wasn't strong enough or they had too much inflation or just mismanaged government policies or a combination of all of those. So now you have basically that great reset happening in Argentina. Do you think that same sort of reset will come to America?
Well, I mean, we're definitely going to get the pain. Right, we're definitely going to experience the consequences of this. Whether we make the right decision, like Argentina has potentially made, I don't know. We could make the wrong decision
and make it worse.
Yes, I mean, we could completely go all in on communism, socialism. We could, if our politicians succeed in blaming this massive crisis that's coming. If they say, you see, this is what happens when you have some capitalism. We need no capitalism. We need government to control everything. We need the government to take over the means of production. All decisions must be made by the benevolent leaders in government because these greedy capitalists have already proven how much damage they could do, right? I mean, who knows, what the voters are going to, buy into. But yeah, there's a lot of risks. But eventually there's going to be some kind of uproar. There's going to be some kind of a revolution. That's one of the main reasons that I object to all of this intrusions on our privacy on the part of government, because at some point, we may want to have a revolution. And, the more power the government has to monitor and control us, the less likely it is that revolution is going to succeed.
Is it like a free market revolution? You're saying people,
or no, like people just like civil disobedience, or just people just trying to fight back.
Wow.
That's one of the reasons that a central bank digital currency would be so harmful.
Why?
Because the government would know everything that you do. The minute you bought something, they knew exactly what you bought. He bought some article on freedom or something on how government, let's get them.
Or ammo.
Yeah, whatever. You got a gun, or they would force everybody underground if they can control you to that degree. They know every little dime that you spend and everything.
Isn't that true of
buy.
credit cards though already?
Well, they already have access to that, but it's not even direct because it's still a private company that has the records. They'd have to get the records. But if it's the government currency,
They have the
then
records.
they have it automatically.
They are the record.
Yeah, they have everything.
They don't have to subpoena
complete
themselves.
control. Yeah.
Wow.
They have all that information on you.
Wow.
And so I mean, it should be resisted. That's at least one of the things Trump is saying is no central bank digital currency. I'm not going to allow that because he does see the threat there.
What do you think, Mikey?
One more cryptocurrency question. You mentioned before that the free market is really good at finding the Ponzi schemes, even better so than government would be.
Yes.
How come Bitcoin hasn't been discovered as a Ponzi scheme? I mean, I know now we have the ETFs and all that, but go back a few years. How come nobody's found Bitcoin as a Ponzi scheme and sold out? Why hasn't it crashed
Maybe
yet?
it's not a Ponzi.
Yeah. Well, it's obviously it's gone on for a long time. And so to the extent that I'm right that it's a Ponzi, and it's not like a classic Ponzi, it's more of a hybrid. It's kind of got elements of a Ponzi, got elements of a pyramid, elements of a chain letter. But it's new, right? It hasn't been used in this form before. And due to the internet and the way we can communicate, the potential audience participants has been greatly expanded. I mean, when Ponzi was operating his scheme, or even Bernie Madoff, I mean, how many people really could get in, but it was so easy for people to get into it. So I think that it's not going to collapse. It's just that this has enabled it to have a longer life. And I do think that ultimately the governments are going to react in the future and probably outlaw a lot of this stuff. I mean, China has already done it. But once everybody loses, their money, the government's going to come in and do something, which they always do, right? After all the horses have left the barn, they try to come to the rescue by closing the doors on an empty barn. But yeah, I mean, it has gone on for a long time. But the interesting thing about it is the peak was almost 3 years ago. So it really stopped growing. Now, some people say, well, that's just temporary. Well, we'll see. But if you go back to 2021, which was really the peak, that was when we had all the big money coming in. The ads were going nonstop. I mean, the ads have kind of recirculated again, resurfaced with the ETFs, but we had all the ads, we had all the altcoins, we had the NFTs, we had El Salvador, we had Sailor, all this stuff was going on. We had 3 or 4 Super Bowl ads. I don't think there's any crypto companies advertising in the Super Bowl this year. We had stadiums that were named for
Crypto.com. Well,
so I think that was like the blow off top. And so I think now, the air is coming out of the bubble. It's taking longer. They've been able to breathe some life into it again with the ETFs. But now that they're here, I think that good news is in the past now. And it's set up for a disappointment if we don't get all this new buying. And then all of a sudden, the people that got in want to get out. And the people that bought in anticipation of the ETF demand, once they think it's topped out. But does that mean it can't possibly make another new high and take out 65,000? Remember, all those people that had, laser beams in their eyes, that was for Bitcoin 100,000, right? So it was supposed to be there a long time ago.
Your neighbor is betting that he will buy a home in this neighborhood with Bitcoin going to the moon. Is he going to be disappointed?
A lot of people have already bought homes in this neighborhood with their Bitcoin. That's why the prices went up so much. So the early money cashed out, right? The smart money that got in. I could have got in. I was too smart for my own good. I outsmarted myself. Because I looked at Bitcoin, when it was, below $10. I don't remember if it was below $1 or not, but regardless, it was low. And I just outsmarted myself. And I just thought, well, and I overestimated everybody else's intelligence to make the same conclusion. Wow. But it was, if there was ever a bubble with my name on it, this was it, right? I should have got in on it on the ground floor. But I also have a problem. I can't buy something and publicly talk about it if I don't believe in it. So I would have had to buy it and kept my mouth shut, which I guess I could have done.
So top 5 investments now. What are your top 5 investment recommendations now? Maybe not recommendations, but what do you think for yourself, your top 5? We don't want FINRA to get upset.
Well, FINRA has nothing to say about it now because I'm not a member anymore. After 30 years, I'm FINRA free. I didn't renew any of my licenses and I pulled my affiliation.
Which ones did you have, by the way?
I had pretty much most of them. I had your standard, Series 7 that people have. But I was a registered principal, which is
the 24?
Series 24.
Yeah.
I was an option principal, which is Series 4. I was a municipal bond principal. I was a financial principal, which was like a 27.
The FinOp.
Oh, yeah. I was ever because I owned my own firm. I had all these licenses. I had to get a whole bunch of them. I had like a dozen of these things.
Wow. Those are hard tests. I just passed.
Well, when I took the test, though, they were on paper.
Oh, what's that?
Yeah. I had to have a number 2 pencil.
How did I type
number
on that?
2 pencil. But now they've upped all this continuing education crap, which all the continuing education isn't about how to be a good advisor. It's about how to comply with their rules and regulations. That's what the tests are for, that all the AML and all the other compliance and stuff like that. But so I'm not doing it anymore. But look, what I think people should be doing, first of all, the do-it-yourselfers that have their own brokerage accounts, discount brokerage firms, they should be loading up on my mutual funds, right? Because those funds have been created and are managed with this perspective of understanding how these events are going to play out and what companies are best positioned to not only weather it, but actually benefit from it. What companies, they're almost all overseas companies, and their primary consumer is not in the United States because Americans are buying on credit. They're buying with currency that's going to collapse in value. I think if your business relies on American consumers, you're going to be in trouble.
Why mutual funds versus, say, ETFs?
Well, you could. I may convert my funds into an ETF.
Okay.
The thing isn't just that it's the fund. It's what I own.
Oh.
It's the businesses that I've invested in. You're not going to find that in any other mutual fund or ETF. People aren't investing the way I am, and I have a long-term focus.
How is that? Give us a structure. Is it all in on Argentina?
Well, most funds are managed to kind of mimic some type of index or benchmark, and so they're really like a closet index, or they may veer a little bit from the index to try to outperform it by a bit, but they don't want to underperform it by too much either. My funds look nothing like their benchmarks. And that's why you'll see some years my funds are number 1 out of like 350 funds, and some years they're at the bottom, right? It's because I'm not afraid to be very different. than the indexes, because I know the indexes are dominated by the most overvalued assets, stocks that have the most to fall. But in the
I think
short
the
run,
Magnificent
Yeah.
5, 6, those
And-
are all overvalued.
yeah, I mean, and the sectors that they're in. I mean, I'm investing to win the game,
Okay.
to have you know.
And that's not
at the
Apple or Facebook or Google or
Well,
Microsoft.
no. I mean, if you want to outperform in the short run, people can own those stocks, but they're so overpriced. You're not going to make any real money in the long run. You could make money in the short run before the music stops if you get out in time. But I don't want to base my investment strategy on hoping I get out in time. I don't have to get out of my stocks. I own the right stocks, right? I have the winning hand. I just have to keep my cards until we can show them. A lot of people are going to lose, but as long as they don't have to show me what they got, right? they could bluff. They can put chips into the pot. So my funds are positioned right, own value assets, good dividends. I gotta get some.
That's all right.
Hold on.
Maybe real estate included in there, or would you add real estate at this point, or is that dangerous to allocate to right now?
Anyway, getting back to my funds first.
Yeah.
So I own businesses that are at low PEs, 4 times earnings, 5, 6, 7, 8. Some of them are higher PEs depending.
Alibaba's down there. Would that be part of it?
Well, we don't have Alibaba. We do own we own Tencent, which is something similar, and we own it in Hong Kong. The shares, or no, in
Singapore.
No, that's Hong Kong. It's in Hong Kong. But they pay good dividends, and most of the businesses that we have are selling products or providing services that people need, and that people are going to continue to buy.
Okay.
Not the companies that are selling people things that they buy if they can afford it because they have money left over when they finish buying the things that they need. I want to buy companies that have pricing power because there's a lot of inflation, so they can raise their prices. And I want companies that have consumers in the emerging markets, in places where people are going to get richer, not poorer, where people are spending from income, not credit cards, where they have adequate savings for their retirement, where they're not dependent on a government-run Ponzi scheme. And you want to have a lot of exposure to non-dollars. You want to have resources. I mean, commodities. I mean, the gold stocks in particular, are just so super cheap because gold is going to be revalued much higher than it is once people figure out, where we're headed and where we are. And so there is an opportunity there. So I have a gold fund. I have an emerging market fund.
Miners or gold itself?
No, the miners.
Okay.
Yeah, gold itself people should own as a store of value, as a safe haven. 5-10% of your portfolio should be in metals, and you should have some metals, on your person, like in your home, just silver, because you may need them. You may go to a situation where that's how you buy things, right? If there's really black markets. If there's shortages and price controls, and a lot of bad things could happen.
Jerome Powell won't save the day.
Well, no, you're not going to be able to buy anything with that money if nobody wants it, and especially if it's illegal to charge a market price. If you want to buy something, you're going to have to do it on the black market, and you may have to do it in something that the government can't track, right? The guy, because there it's controlled by the seller. So the seller may say, "Hey, I've got some of these products, that you need, but I want silver." I want something that the government doesn't track because it's illegal. I'm doing something illegal. I shouldn't even be selling you this, right? I'm breaking the law. I don't want to get caught. So you got to pay me in something that that they're not going to know that I did this transaction. But my funds, I think, are unique. We have some property trusts in the funds, that own property, but real estate, is a hard asset, a real asset. It's not quite as portable and as liquid as, let's say, gold, but you can generate income from real estate. Either you can rent it out, or you can farm it,
What property
farm.
funds? Would it be like multifamily, developers, home builders?
Yeah,
Like,
I mean,
what
we
do you
have
like?
some
American?
in Asia. No, I don't
Okay.
own any in the U.S.
No, would you?
Because I'm trying to get out of the U.S., get out of the dollar.
Even out of U.S. real estate, you want to get out of
Well, I don't want to be in the publicly traded.
vehicles. Okay.
Now, U.S. real estate to me is, it's not going to be homogeneous, And, I was telling people for a long time, yeah, you can go out and buy a house as long as you get a 30-year fixed rate mortgage, because that's your big asset. The fact that you were able to borrow all this money cheap. The only way to lock it up was to buy a piece of property. But I still said, look, it makes a difference where the property is. It's not all the same. But now you can't get a 30-year loan, at 3%. You're going to pay maybe 6.5%, 7%, which is still probably a decent rate. But it's not like it was. But yeah, I mean, people could still buy property if it pencils out right, the values that are there. But I think the market is overpriced. And in real terms, right? If you want to think about how much gold do you need to buy a house,
Sure.
you're going to be able to buy a lot more house with your gold in the future. You won't need as much gold to buy the house, because in those real terms, it's going to come down.
Oh, that's because you think gold prices will go up, not because you think real estate prices will come down.
Well, it's because I think the value of the dollar is going to go down.
I see.
And as the value of the dollar goes down, the price of everything else goes up.
Okay, so the value of homes denominated in dollars would actually go up.
Right. But not up, not up as much as in gold.
Okay.
And so that really shows you that the real price of real estate is going down, even as the nominal price is going up. But I don't think that it's just gold that will go up more than real estate. Corn, cotton,
All
coffee,
commodities.
cocoa. Right. I mean, and what it costs, your insurance, your health care, everything else, your grocery bill. I mean, everything is going to go up more than your house. Now, the thing about your house is the leverage component to it, right? Because you're borrowing money to buy the asset, and it's the leverage that could end up making you some money, because inflation wipes out the debt. Inflation transfers wealth from creditors to borrowers, so the lender loses at the borrower's gain. That's why the U.S. government. One of the reasons they create inflation on purpose is because the U.S. government is the world's biggest debtor. And so if inflation...
So they have to keep it going. They have to keep inflation up.
Yes, because that's how they can inflate the debt away.
So the Ponzi keeps going. I go long stocks.
The debt is unpayable, right? You can't pay the debt off, so they try to reduce the value through inflation. But again, it doesn't continue in some benevolent cycle. Eventually, there's a collapse. Eventually, inflation runs out of control, right? They can't, they can't keep it in control. It always gets out of control, right? It's like they think they can control the fire, but they can't, right? Because it's got to get bigger and bigger, like a drug addiction. People think they're gonna control their addiction. No, because you keep needing. The more you do a drug, then now you don't get the same effect. You always have to increase your dosage, and eventually, now you're taking too much. So we keep needing more and more inflation to paper over the mistakes created by the last inflation. Again, look at all the debt we have now. Look at how much inflation we have to create to prevent rates from rising, because the whole thing would implode. I mean, what if interest rates went to 10%, right? I mean, they went to 20% in 1980.
George Gammon believes that this is what's likely, that the yield curve is indicating we're about to go to potentially much higher rates in the future.
Well, we should go to a higher rate. I mean, fundamentally, we have a lot less savings now and a lot more debt than we did in 1980. So the market should price credit higher now, especially the U.S. government. In 1980, we had $1 trillion in debt. Now we're $34 trillion in debt. In 1980, we were the world's biggest creditor nation. Now we're the world's biggest debtor. We had trade surpluses in 1980. Now we have trade deficits. So just looking at the U.S., we're a much worse credit risk, right, than we were back then. And so, the worse of a credit risk you are, right, the lower your FICO score, the more expensive it is for you to borrow. Yeah. So our cost of borrowing should be higher now than it was back then. And, just supply and demand, we have more debt, less savings. That means a higher price to clear the market. But let's say rates went to 10% between now and the next few years.
Okay.
And the national debt goes to, let's say, 40 trillion. Well, it'll be there in a year. So let's say 50 trillion. Let's say in 4 or 5 years, we have $50 trillion debt and we have 10% interest rate. Well, what's 10% of 50 trillion? 5 trillion.
It's a fifth.
That's more than the government collects in taxes.
Sure, it's a fifth of our economy.
That's just interest. But also, when you have all this short-term debt, which is what we have, right? And as it matures, we keep rolling it over short-term. People can take their money back. We're all focusing on the interest. What if we have to repay the principal? Because people are under the impression that we never have to repay the principal.
Right.
Well, that's not true because we're borrowing the money. We're not stealing the money, right? So like when people tell me we never have to pay back the national debt, I always say, well, have you discussed this with the lenders? Do they realize that's the deal? Right? They never get their money back. But if people don't want to buy treasuries anymore and the treasury matures, right? They go to the U.S. government, they bought a 1-year treasury. Okay, let me have my money back. And the government says, well, don't you want to buy a brand new one? No, thank you. I just want my money back. I don't want to buy another one. How do we convince them to buy another one? Well, how about if we pay you more interest? How about 6%? Nah, I'm still not interested. I want my money back. 7%, 8%, right? It takes, but we can't pay. So if we're not able to raise interest rates because we can't afford it, it's not just the interest, it's the principal. Mm-hmm. And so where's the principal going to come from? It's going to come from the Fed. Now, remember,
which exacerbates the problem.
Right. When Ben Bernanke first did quantitative easing, before they called it QE1 because it was the only one, he went to Congress in 2009. And there was, some Republicans who were said, hey, wait a minute. You're monetizing the debt. Mm-hmm. This is bad. This is Banana Republic style. You can't monetize debt. That's inflation. Bernanke said, oh, no, we're not doing that. We would never monetize the debt. No, we realize that's bad. We're not doing that. He said, this is temporary. Mm-hmm. We're going to sell these bonds right back into the market. We're just doing this. It's an emergency. We're just temporarily buying these bonds and mortgages. We're going to sell them. So the balance sheet is going to go right back down as soon as this crisis is over. So yeah, no, we're with you. We would never monetize this debt. Right. So back then I said he was lying because I said, there's no way that you could do this and then reverse it. I said, it's a monetary rotel. You could check in, but you can't check out. That's why I said that when this is over, they're going to do it again. That we'd have more QEs than Rocky movies. I say this at the beginning. Well, now here we are 12 years later, the balance sheet is almost 8 trillion. So clearly we did monetize the debt. We did exactly what Bernanke said that was really bad and he would never do. Well, that's what we're going to do with the debt. We're going to monetize even more of it. The balance sheet's going to go to 10 trillion, 15 trillion, 20 trillion.
Wow.
Right? Because they're going to have to buy the bonds because nobody else is going to buy them. And now it's going up, exponentially. But then too, it's not just the treasuries. They got to buy muni bonds. They got to buy corporate bonds. They got to buy the mortgage-backed securities because everything they don't buy is going to, collapse and the yields are going to go up. So that's where, the slippery slope to hyperinflation. And the only way to get off that slope is to crash the economy on purpose, to have a financial crisis that's worse than 2008. And I'm talking about a financial crisis where you lose your money, where you have an account at Bank of America or Wells Fargo and you lose the money. Not just that the government doesn't insure the deposits that are over 250.
It's all gone.
It doesn't insure anything because the FDIC doesn't have the money unless the Fed creates it. Well, the Fed can't create it if it's fighting inflation, if it's restricting the supply of money, which it needs to do to stop hyperinflation. So that's why I tell people, if you have your money in the bank, there's only two ways it's going to end. You're going to lose your money in the bank, or your money is going to lose its value. So you're going to lose your purchasing power, or you're going to lose your money. But either way, you're going to lose. You're going to go broke if you have money in the bank, because all the banks are going to fail unless the government bails them out. But if the government bails them out, then the money fails because they have to create massive inflation.
Wow.
It would be better if you lost your money. But if your money loses its value, it's worse, because now you got a bunch of worthless money. But that has bigger problems for the economy.
And you think that's close?
Look, it's been close for a long time.
Yeah. But now we've just had a banking crisis. I mean, now going into 2024 here, is it happening?
Look, we're obviously we're closer now than we've ever been, right? And I don't think people should be pressing their luck. People should be preparing as if it was going to happen tomorrow. And if it doesn't happen tomorrow, then at least you're prepared, right? You got these people, preppers that are like, building doomsday bunkers, right? I mean, this is a little, not as extreme as that. I'm not going to necessarily laugh at the doomsday bunker. I may end up with my own, but this is a lot less extreme. But again, you can't build the doomsday bunker after the crisis.
After the doom.
it has to be in place and fully provisioned in advance. Mm-hmm. So you got to get your financial house in order. Because again, it's not a question of will this crisis happen? It's 100% certainty that it will. The only variable is when. Now, maybe you'll get lucky and die, before it happens, right? And then it's your kid's problem. But I don't want to bet on dying to avoid the problem. I want to be here. You saw all the equipment I've got to keep me young.
Multiple hundreds of thousands of dollars of.
I'm trying to.
You were in it. How was it?
Very chilly.
Yeah. Negative 124 degrees.
It's going to be real chilly in the financial world too if you don't have yourself protected. So as I said, you got my mutual funds, but people can work with me directly. They can come to my asset management company, which I'm still there. So that's SEC registered, not FINRA anymore. I'm SEC.
Because that's an investment advisor,
right?
And
not
we're fee-based.
A broker. Okay, right, we're fee-based. So I don't work on commission anymore. I just manage money for a fee.
Okay.
But I think we do a job that you're not going to find anywhere else in the investment community. No one's got the balls to manage the money the way I do. And they don't actually have the foresight to understand that they need to do this. But I think we're constructing and managing portfolios that are ideally positioned. I mean, if you would have had my portfolio in 1970 and you would have stuck with it through 1980, you would have just crushed it. Wow. I mean, you guys remember what happened from 1970? The dollar lost about 2/3 of its value against other currencies. The Deutschmark went from you got 4 Deutsche Marks to the dollar to 1.5. You went from buying 360 yen to about 150. Oil went from $3 a barrel to $30 a barrel. Gold went from $35 an ounce to $800. Right? We went through this massive stagflation. It was a terrible economy, right? All these married women were forced into the workforce because their husbands' salaries were eviscerated by inflation and taxes. And so they had no choice. They had to go get a job. But the investments, certain investments, if you invested in Japan, if you invested in emerging markets, if you invested in commodities, you invested in oil, you invested in gold, you made a killing. Where did you get killed? If you stayed in U.S. bonds and U.S. stocks. Right? Wow. U.S. bonds, complete disaster. Stocks, in the 1960s, they had something called the Nifty 50. Right? These were stocks. They called them one decision stocks. The only decision is when to buy. You never have to sell because they never stop going up. Right? In 1966, the Dow was at 1,000. In 1980, it was still at 1,000, despite all that inflation. Despite the fact that gold went from $35 an ounce to $800, the Dow didn't go anywhere. That's why the real price of the Dow in 1982, I think, was at an all-time record low, or 1980-81. It was almost 1-to-1. That was lower than the Dow was at its low point in 1932. It was actually the record low for the U.S. stock market was in the early 80s in terms of gold.
Like, in terms of gold, 82 was also just in terms of dollar bottom, and then it was up like 40 years from there.
Well, in the early 80s, you wanted to sell all your gold and buy stocks, right? Now you want to do the opposite if the only choice were U.S. stocks, because you're looking, it's not quite 20 to 1, right? The Dow is almost 40,000 and gold's about 2,000. So it's close to 20 to 1. That was where the peak, that was the peak in 1929, 20 to 1. Now, the all-time record peak was 2000. It was like 40 to 1. The dot-com bubble was the peak for the day, because gold was under 300. So we got about a 40 to 1 ratio. So we're well off the highs, but we're still in expensive territory. I think the Dow is going to come, below 2 to 1. I don't know if it'll get all the way to 1 to 1.
And that again could be gold up.
Yeah, well, the same thing. So where would it be? So if the Dow is 40,000 and gold is 20,000, that's 2 to 1. But the Dow can go to 10,000 and gold can go to 5,000.
Why has gold been so stuck with all this inflation?
Well, you remember, gold went from under 300 in 2000 to almost 2,000 in 2011. Had a huge gain. Yeah. It's now moved sideways for a while, consolidated those gains.
Yeah. It's
getting ready for another big leg up. This is all going to smooth out. In 30 or 40 years, when you look back, you will barely notice this period of stay. When you look at gold at 10,000, 20,000, wherever it's going, because it has to go there. I mean, the dollar has already lost 99% of its value against gold. When we started on the gold standard, when the Federal Reserve was introduced, gold was $20 an ounce. It's now $2,000 an ounce.
That's a good point.
That gold hasn't changed. Gold is the same. The dollar has lost 99% of its value. You need 100 times as many dollars to buy an ounce of gold as you needed when we created the Federal Reserve. But the thing is, before we created the Federal Reserve, gold in 1800 was the same price it was in 1900. Because the dollar didn't lose value for those 100 years because we didn't have a Federal Reserve during those 100 years. We had capitalism. Prices were going down. So people should, they could come to my RIA, Europe Pacific Capital, and we could create a portfolio. Because if you stayed with the stocks that worked in the 60s, in the 70s, you lost your ass. If you were smart enough to make the shift out of the Nifty 50, out of the Polaroids, right? That was one of the stocks, right? How many people are using Polaroids now, right? Maybe as a gag item at a party, once in a while somebody will take a Polaroid, right?
Shift.
But everything that's new is old eventually, right? All the new technology is old. I mean, I remember, cassettes came and they replaced records. And for a brief period of time, I thought I was cool with an 8-track. And that didn't last very long. And then oh my God, look at these DVDs. Who has those? They don't exist anymore either. I mean, it's there, it's new, it's great, and then it's gone, right? So, but if you stay with, the stocks, that dominate the NASDAQ, these few stocks that everybody made money in, if you overstay that party, you're going to have massive losses, just like people did in the 1970s, probably worse. You've got to recognize, that the time to leave was yesterday. I mean, you can't try to get every last drop. There was a famous, I think, saying, it was it was Bernard Baruch, but whatever, what was your secret to investment success? I always sold too soon, right? You can't try to get every last bit of a bubble, right? You got to get out, and you got to be willing to let somebody else,
I think we've got a couple final questions.
But let me finish the point. So you got to make this shift. And that's what my portfolios that I have now and I've been building are the ones that are going to do well in the next cycle, right? Not the ones that did well in the last cycle, right? They're going to get crushed.
I see.
Right. Invest for the future. Anticipate how the winds are going to change and where the pendulum is going to swing, and skate to the puck, right? Where it's going to be, right? And
shoot ahead of the running deer.
Yes, all these. There's all kinds of ways to explain this, but people don't get it in the investment world. So I'm there. These portfolios, and they're still producing returns, positive returns, paying dividends. But in the long run, if I'm right, in the long run, maybe just around the corner, these are the strategies that you need to adopt.
Mikey, you have a question? we've got H who has a couple questions. If he could jump in really
yeah,
quick.
you can jump
hop
in.
on in, H. You want to just hop in so you can listen to the mic? You want to switch really
Let's
quick?
switch seats.
It's really a couple last final questions here, Peter. Thank you so much for your time. This has been wonderful. But H, you've written down a few questions here. What do you got?
Yeah, so you mentioned China as the rising economic power. Pretty much, I think we agree that Bernanke and friends in '08, debt monetization, they chose an inflationary route, and now we're having to pay for it. We're going to have to pay for it for the next couple decades. We don't know the exact timeline, but it's either it's like an inflationary bubble, it's a giant essential Ponzi, and the only way we could get out of it is a deflationary bubble, which nobody wants to do because all the inflation was in assets and all the rich people who are in charge. It's no bueno. It's probably not going to happen. My question is to you is that, do you think China chose the opposite? Do you think China is currently in its kind of '08, where it's earlier in its economic rise, still relatively higher GDP numbers, and they've chosen to do the more fiscally and monetarily responsible thing by choosing less stimulus? We see that, the Hang Seng Index is way lower. It's been paying for around 2-3 years. We saw that they, even during COVID, with all that pressure, they chose to actually limit the economy, to not be giving out as many stimulus checks. So yeah, I guess my question to you is, my hypothesis, my thesis is potentially that China is doing the responsible thing, even though they are socialist, communist background historically. Would you agree, disagree, and why?
Yeah, I mean, first of all, they always choose inflation over deflation because they can always blame the inflation on somebody else, and the pain generally happens later rather than sooner. That's what happened. I mentioned when we went off the gold standard in 1971, Nixon had a choice then, deflation or inflation, because we could have stayed on the gold standard and allowed a deflation. We could have allowed prices to come down, asset prices, good prices, to meet gold. Instead, we went off the gold standard, and instead of the prices of everything coming down, the price of gold went up, right? That's what we did. We ended up devaluing the dollar instead of deflating the economy, which had been inflated based on all the stimulus spending of the 1960s, predominantly the war on poverty, Great Society.
Lyndon B. Johnson, right? Yeah.
Yeah, all that stuff that happened in the 60s. So we have a much bigger bubble now. We had much more inflationary policies. Deflation is the solution to our problem. But the disease is so big that the cure kills us too, right? I mean, it's like that's the problem. And so they're going to choose inflation. Now, the reason that China may not is one of China's strengths when it comes to...
May not what?
May not choose inflation, may make the right choice. Okay. Whereas America won't, is China doesn't elect its leaders democratically.
Party control.
So the problem with democracy, and it's an underlying flaw that every democracy struggles with, and it's why we're not supposed to be a democracy. The founding fathers understood the evils of democracy. They called it mobocracy. And they established a republic. We had some democratic aspects within the republic, but the whole idea was to safeguard the country from the evils of democracy, because they knew that democracies are as violent in their deaths as they are in their births.
And what do you mean by that?
So the problem with democracy is decisions are being made that are politically expedient for the people who are making them. And so doing the right thing always requires some pain and always requires some honesty on the part of the politicians to prepare the people for those bad things. Like, hey, this is what's going to happen. It's going to be hard. You're going to lose some money. You're going to have to work harder. You're not going to get this. You're not going to get that. But years down the road, you're going to benefit, right? That's not what the voters want. If somebody else says, "Oh, that guy's full of shit. You don't have to do that. I've got a program for you. I'm going to fix this. I'm going to give you money." And so in America, we're going to do what's right for the politicians. We're not going to do what's right for the country. But in China, they can do what's right for the country because they don't have to worry about the election. What they have to worry about is the people. Because what would cause a revolution in China would be poverty and misery. And so when you're like, a ruler, which is one of the reasons why I like, a constitutional monarchy. I think I would prefer that than to a democracy for sure. Where you have a king who rules, but you limit their power, legally. But a king is trying to protect the country for his kids and his grandkids, right? Politicians don't give a damn about what happens to the country after they're dead. They're just living for the here and now, and they don't leave. If you're the president, your son doesn't inherit your presidency. What do you care, right? But if I'm the king of America, I want my son or my daughter to inherit a healthy, viable America. I don't want a revolution, right? I don't want to end up, or with my head on a spear. But so you have a reason to try to do the right thing for your country.
Politicians have kids too, right?
Yeah, but they're not going to inherit.
Politicians don't care about their kids.
They don't think about that,
Well, see, but what's wild is I never thought I would come to Peter Schiff's house and hear him advocate for monarchy, but then
No, it makes sense. I see the
but
argument.
also make a good argument on it.
Well,
Right?
let's put it this way. If I was the king of America, how much money do you think I'd need?
King in the castle. King in the castle.
No. If I was the king of America, if you were the king of America, how much would you need to live pretty good? I mean, could you live well on $1 billion a year?
Oh, much less.
Yes,
Yeah.
you don't need that much, right? I wouldn't need this whole huge bureaucracy. I would not need an income tax to maintain my kingdom. My subjects would be free. Right? I would just take a small little tax. Maybe I'd have a national sales tax of 0.5%. That's all I need. I could cover everything with that. I'd cover all my lifestyle, all my parties, and I could still have army protecting everybody. It wouldn't cost that much.
Wow.
And we wouldn't even need that big an army because we wouldn't be making enemies, because we wouldn't be attacking anybody.
So in this Schiff kingdom, would the currency just be gold?
Of course, I wouldn't. Of course. Real money. No, you don't want the monarch. Again, limitations. The monarch can't print money.
Interesting.
So if I wanted money, I'd have to collect taxes. I'd have to take some of your gold.
Or go mine.
Well, I don't. If I owned a mine, yeah.
So going a little more back.
But
seriously,
so going back to your thing. So China can do the right thing.
Okay.
Right. And again, not that I'm saying we should be communist, right? But I'm just saying that elections are not all they're cracked up to
Wow.
be. What's the most important thing is economic freedom. So if I had a choice between political freedom and economic freedom, I take economic freedom. Right. So if someone say, here, you can live in a country where you can't vote, but you have no income tax, you have private property, you have sound money, right? And you have good government, you just have no say in it. Or you can live in an awful socialist country where, half your money is taken in taxes. You got all these rules and regulations. And every 4 years, you can vote for which socialist you want to run the country.
Yeah, it's whoever offers the biggest check.
Yeah, I mean, and the thing is, like, when I moved to Puerto Rico, one of the things people said, well, you're going to give up your right to vote. I said, well, who cares? I mean, I lived in Connecticut. I never vote for the winner of any election. What good is voting for the loser, right? I mean, maybe I could have moved to Florida and maybe I could have voted for the winner. But to me, all right, I can't vote for the president, but no matter who wins, they can't tax me. So so personally, it doesn't matter because none of them are going to tax me. Now, the thing is the big tax that everybody has to worry about now is inflation, right? So I avoid that with my investments, but where they get you a second time is with the capital gains tax, because inflation makes phony gains. But I have zero capital gains in Puerto Rico, so I don't have to worry about that.
Wow.
So if I buy something for $1 million and then the dollar loses 90% of its value and I sell it for 10 million, but it's really the same million that I invested, I don't have to worry about paying a tax on that gain that isn't really a gain. Right? The government creates inflation, which benefits it, and then it taxes you on the gains that don't even exist. So the government wins twice to inflation, and you lose twice.
Peter, how can people follow you?
All right. Well, I mean, I'm on the internet, right? I've been having a hard time getting to 1 million X followers. I've been at 990,000+ for a while now. Every time I gain some, I lose some. I don't know what's going on. It's like tug of war. But you can follow me on X, because that's where I put out the most personal stuff, But I'm also on Facebook, Instagram, TikTok. I mean, I'm on all the social media.
So you like Elon more than Zuck, it sounds like.
Well, because there's not as much going on Facebook. People don't go to Facebook. How often do you go to your Facebook page?
What's that?
Yeah, see? But remember, at one time, everybody loved Facebook, right? Just like Bitcoin, right? Then, Facebook got rid of MySpace.
Do you have an Instagram?
I do have an Instagram. Yeah, well, that's what's
pitching photos.
No, but that's what's saving. That's
Him
what
on the
saved-
beach.
that's
Sexy
what
gold
saved-
bars.
That's what saved Facebook is he bought Instagram.
Yeah, of course. And
Just-
WhatsApp. Yeah. He
Yeah.
just buys other people.
Yeah.
Why not?
Nobody would know, and they bought it with their stock, right? It cost
Sure.
their issue
Shareholders
stock.
paid for it. Yeah.
Yeah. But all of a sudden, who would have seen TikTok coming, right?
Mm-hmm.
Out of the blue, right? TikTok comes in. But so I'm on all those. But YouTube, of course, I put a lot of content there. My YouTube channel, that's where my podcasts go. I do the podcast. I'm doing one later today. So I got to take a break. I got to save my voice.
Thank you.
Do my own podcast later today at Schiff Radio. You can listen to it at Schiff Radio or on my YouTube channel. So subscribe to that. And again, visit my website, Europac.com is the website for my asset management company. You can give us a call. We got a toll-free number up there. You can send a message or email, talk to one of my advisors. And for physical precious metals, Schiff Gold. Right?
Schiffgold.com.
Exactly. Schiffgold.com. And, they tried to get me to buy gold.com recently, and I just didn't feel
How
like
much do they want?
like $7 million.
Oh my gosh.
I don't know. They kept saying, it's a bargain. I don't know. I mean, I got Schiff Gold right now. But
That's amazing.
so schiffgold.com.
And I want to make it clear this video is not sponsored. Thank you for inviting us into your house.
Yes.
And thank you. This was very insightful. We
Yeah,
really
well,
appreciate it.
thanks for coming by, right? You didn't make me come all the way out to California. You guys came out to Puerto Rico.
Even though I'm a licensed financial advisor, licensed real estate broker, and becoming a stockbroker, this video is neither personalized financial nor real estate advice for you. It is not tax, legal, or otherwise personalized advice tailored to you. This video provides generalized perspective, information, and commentary. Any third-party content I show should not be deemed endorsed by me. This video is not and shall never be deemed reasonably sufficient information for the purposes of evaluating a security or investment decision. Any links or promoted products are either paid affiliations or products or services we may benefit from. I also personally operate an actively managed ETF and hold long positions in various securities mentioned, including potential short positions. However, I have no relationship to any issuers, nor am I presently acting as a market maker.